Okay, we are live. Welcome, everybody. We are going to be looking at the HIMS earnings results in real time here live on the stream. And then we are going to be listening to the HIMS earnings call starting at 5 p.m. Eastern. You're going to be hearing it here on the stream. I have Mr. Manuel with me, and I also have Roy with me. All three of us are HIMS investors to varying degrees. And this is going to be a really fun stream. Guys, how's it going?
Good. It's going to be volatile,
to say the least.
It's going to be this stock was down 11% in this morning, and then it went up from minus 11 to plus 6, and now it's back down to 0 and now to 3%. What's up?
It's absolutely silly, just like it moving at all with earnings coming up. But I mean, like that's what happens on volatile names, low floats, lots of short interest, lots of catalysts. And the funny thing is, like the actual results, everybody knows that they're going to be good. Like they're going to be really, really, really good. But it doesn't really matter. It's the guidance and the impact of the GLP-1 stuff, even though that's not the long-term bull case for HIMS at all. But that's what's front and center now. So it's exciting.
It's going to be a fun stream. Manuel killing a bug in real time live.
Yeah, man. What? I got so scared out of nowhere.
We're running a professional operation here, guys.
Fucking dragon.
Yeah, so the market, I mean, today was a red day, right? It was red across the board pretty much. We saw a little bit of a recovery throughout the day, and then it kind of dropped halfway through. But yeah, HIMS looks like it's going to end the day up almost 4%. We'll see in the last 2 minutes of trading what happens. And then the earnings results are going to drop shortly after that, which we can cover live together.
Yeah, in this move, just as a reminder, guys, it doesn't really matter until earnings hits. And then you'll see, if you're new to earnings, if you don't follow earnings up very often, you'll see the stock kind of jumping all over the place even before the actual earnings hit. So don't get too excited. Also, the initial reaction is not always right. That usually there's a quick pump or a quick dump and then a recovery. So yeah, keep that in mind.
It's all algorithmic trading in the very first seconds and minutes after earnings. And then, I mean, I think with this call specifically, the actual call is going to be even more important than the numbers because of the news that came out on Friday with regards to semaglutide. So we're going to stay tuned for that one.
And we've got Tanner in the chat. Yeah.
He's watching as a shareholder. Yes.
So you know about that, Manuel, right? Like how he
Yeah, I saw it.
Yeah.
So it's the Christmas thing.
Yes, right? And I kind of felt bad for Tevis and I felt bad for Chris because any of us would have given him. So we're just like, it's priced stupidly. It's way better than most opportunities that we see out there. Easy to give that one.
I love how like people are calling Tanner Little T now.
Little T.
Roy gave him HIMS. Yeah, I got Cole for Christmas this year, Manuel, from Tanner. I got Cole in the form of Joby.
Manuel might like Joby. Like, who knows? Maybe he's into eVTOLs. Do you know Joby at all?
I mean, I know a brief description, but it's not really my cup of tea.
They report earnings this week, man. They report, I think, on Wednesday. So we're gonna see how good old Jobs performs.
Yeah, I mean, maybe it turns out to be a great choice.
I mean, it could. Like that's one that it's extreme risk, can have high reward. I prefer the risk reward on HIMS, obviously, but you know, he had to pick something that would possibly beat out HIMS, and so he's like had to take the risk.
All right, the market is officially closed. We will be taking no more bets today.
I think it's at 9:05. HIMS.
Yeah, usually it's a few minutes after. Though I've not. This is only my second earnings call with HIMS as a shareholder, so I don't recall how soon after that they published before.
I think it's really like in the first 5 minutes.
The call is at 5 p.m. Yeah, the earnings actual results should be dropping any second now. I'm staying tuned to see the actual drop, and then we can go from there. Yeah, but the implied move for this earnings was 22%. So it closed at $51. It can be up 22% or down 22% as a result of this earnings. And yes, Gurge, it really is a casino.
Focus AI.
Down at 43, went up to 53, and then closed the day at 51. So you never know, man.
Yeah, I ended up at around 50 rebuying some of the hymns that I sold 2 weeks ago. So it just was like, okay, but some of it was cash secured puts and some of it wasn't. But
yeah,
I don't mind it here. Like, this isn't like obviously a super cheap price, but it also doesn't feel very expensive either. And I realized, like, yeah, I need a little bit more hymns.
Yeah, it doesn't feel expensive. I don't know, man. Like, it's what, 10 billion, $11 billion in market cap. It's not the craziest thing in the world. But yeah, I have some initial like cash secured puts. Obviously, I have a core position that's much like in the 20s, but I have cash secured puts. And then I have cash on the side just in case this falls 20% tomorrow and I want to pick up more cash secured puts.
Yeah, I've got cash ready too.
Yeah.
If it falls a bunch tomorrow and I don't feel like it's warranted at all, I'll probably be back to having my initial position, like the full position, because I had taken some profits. We just went up so much. So have you, Manuel, taken any profits off the table, or are you just holding on to what you got?
I took like 15 or 16% of my position at $60 per share at like
nice.
600% gains or 500 and something.
Yeah, that's all right.
So it's like a risk-free position, I would call it.
Yeah, that's awesome.
Because I took more profits than what I invested initially. So
yeah, I love when that happens. It just it makes it a lot easier, especially in a very volatile stock with a lot of different catalysts, positive and negative. Just easy to hold. Like I did that with Palantir, where everything else is paid for fully. So if it crashes to zero, it's like, well, it still was a really good investment. So, and it's not crashing to zero.
Yeah, exactly. It's not crashing to zero. So we're safe, let's say.
It may go down a lot, but
yeah, but not to zero.
No. Nothing out yet, guys.
No, I think it's really at 9:05.
All right.
Like 4:05. Yeah, 4:05, you mean?
Oh, sorry, it's 9 in Portugal.
Or 3:05, depending on what time zone.
Yeah, sorry. I totally forgot.
All right, so we got 1 minute basically.
When I lived in Eastern time zone, I was like, I just referred to that as real time. And now that I don't live there anymore, it's annoying. So
where are you living now?
Houston, Texas.
Okay.
Or I guess I should say Houston, Texas.
All right. Well, we have almost 700 people here, which is great.
Jesus. 700. Last time was a record and it was like 300.
Well, I mean, every earnings that you're going to do for HIMS is going to get more and more people.
Yeah, because last earnings we only did the conference call. We didn't start
like last earnings. This was trading at like $18, bro.
Yeah, nobody cared.
Oh, like we're up 6%. So something's coming out 7%.
So while we're looking at these results real quick, if you guys bought into HIMS for the first time like this quarter, let us know. I'm just kind of curious how many brand new HIMS shareholders there are.
Yeah, I'm going to do the polls and all that stuff after. I'm just looking for the numbers right now.
I don't think we have anything yet.
Down. Crazy.
Yeah, that initial reaction.
Okay, now we have, we have the numbers now.
All right.
Let's see
here.
2.3 and 2.4 billion in guidance.
Really? That's good. Okay. 11 cents EPS, 481 million in revenue. Both double beat. That kind of seems light to me, though. That seems really light to me. Yeah, not a very strong beat. So EPS of 11 cents, beating out expectations of EPS of 10 cents.
Free cash flow 59.5.
There it is. Finally.
And revenue of 481 million, beating expectations of 470 million. Let me just post about this, guys, and I'll put up the deck. Okay, let me get to the actual news. All right, let's take a look here. See if we can find out the presentation.
Yeah, 95% year-over-year growth. So I don't think that's much of a shock. Like, we knew that it would be somewhere close to 100%. Gross margin at 77%. Compared to 83%, which isn't a shock. There's GLP-1s are not as high of a margin product. It's still very lucrative for Hims, but the more that they scale out, the further the margins will go down. Net income 26 million, adjusted EBITDA 54 million versus 20.6 million last year.
What are you using to see those numbers? I'm just on their IR page. I'm going to throw it up in just a second here. Wow, average monthly online revenue per subscriber, $73.
Yeah, that's not a bad guidance at all. 2.3 to 2.4 billion, depending on what they're looking at with the GLP-1s. If they do see a good bit of volume of GLP-1 winding down because of the shortage list ending, then that's actually really, really good. But I don't.
All right, let me throw this up right now. The stock is down about 14%. Let me throw this up on the screen and then we can cover it together. I love how the actual document itself says draft on it. Like, guys, should be looking out for that one. Okay, cool. So let's dive into some of the numbers here and we can walk through them together. So 481 million in revenue, up 95% year over year, 69% on an annualized basis to 1.5 billion in revenue for 2024. 26 million in net income versus, 126 million in the full year versus a $24 million loss last year. So that's a big, big bump. Adjusted EBITDA, look at these percentages, up 163%, 257% on an annual basis. Cash flow up dramatically. And subscribers, 2.2 million. And then the average monthly online revenue per subscriber is also up 19% on a yearly basis. All right, let's take a look. Q4 letter to our shareholders. 2024 was a transformative year. This is Andrew, I'm guessing, Andrew's letter. I'm extremely proud of everything the team was able to accomplish. This is probably what he's going to start reading at the start of the earnings call at 5 p.m. Here we're seeing a graph, which we've never seen before, a share of the observed total customers, which to me, this says Hims is gaining market share. Guys, how are you seeing this?
Yeah, there's no other way to read it. I like that they show, Roman is mentioned all the time. Noom, not as much, but yeah, BetterHelp.
I don't think that's the best chart, to be honest. I think they use it, but it's just really because check the source. It doesn't include several things like weight loss. Oh no,
Yeah.
now it includes weight loss, right?
And weight loss, yeah.
Oh, nice. Because if you remember, like the similar chart they had like a few quarters ago, which was like that, it was excluding weight loss and everything else. So now they included weight loss. Probably because it's
the scale. 2024 revenue grew 43% year over year to 1.2 billion, excluding contributions from our GLP-1 offering, and 69% year over year to almost 1.5 billion on a consolidated basis. While we are excited by the strong business performance, we are even more energized by the foundation that we have built to fundamentally transform how individuals can achieve better health in the future. So you're seeing a large revenue growth, even excluding GLP-1 offerings, which is like, obviously that's encouraging as a standalone as well, right? Let me see if I can.
Yeah, let me check something.
Yeah, revenue grew 43% year over year to 1.2 billion, excluding contributions from our GLP-1 offering.
Exactly.
And a 6.9% or 69% year over year to almost 1.5 billion on a consolidated basis.
This is interesting. Like at the beginning of 2024, the revenue expectations from analysts were $1.1 billion. So at the time, there were no GLP-1s. And we did 1.3 or 1.2 without GLP-1s. So it was still a better quarter than expected, a better year than expected.
So basically, at the beginning of this year, at the beginning of 2024, analysts were expecting 1.1 billion total, and Hims delivered 1.2 billion even without GLP-1s.
Exactly.
Is that what you're saying?
I'm saying that because these 1.1 billion dollars in expectations were prior to GLP-1s. So yeah, it's kind of more comparable, I would say. Jesus.
One thing I will say about Hims is it's not the easiest shareholder documents to go through. Other companies, it's kind of nice because they have the same format each and every time. They put everything in the shareholder letter, and then there's a different order for everything. So it's like, okay, well, where is this? And do they have this time? So it's not that they're hiding things. It's just they're emphasizing things and bring it to the top.
Right. So, okay, let's continue here. Reported retention. I feel like they're going to talk about this a lot as a differentiating factor, this reported retention rate being much higher than the industry standard. And that's going to be something that's going to form the basis of their argument to continue compounding. What do you guys think?
I mean, I don't know that that's going to be a valid argument
Exactly.
for compounding. It's not for 503A. You need to show clinical necessity, and I don't think retention really has anything to do with that. So they'll make other arguments, but this isn't one of those.
I would argue that like the reason why the retention is so high is the argument, because I mean, I'm sure they can pinpoint down like, okay, well, we have a much higher retention because we have lower side effects in our patients that we're seeing.
Yeah, but it could also be the price. I mean, the price also helps a lot, I would say.
Right.
Yeah, they've got a slide further down on the price. Actually,
exactly. Being the lower cost provider also helps a lot with retention rates.
Yeah,
exactly.
Annual cost of GLP-1 weight loss subscription plan, inclusive of member costs and other fees. Wow. Look how expensive Ro is. Holy crap.
Yeah, I thought Ro was cheaper. I mean,
yeah, that's weird. I wonder if they have they have that agreement with for tirzepatide. So probably with that agreement, there's some sort of revenue share thing. So that's probably why versus the others.
I'm not sure if
Weight Watchers had an agreement.
Ro had an agreement with Lilly Direct, which is like the platform Eli Lilly launched like with cheaper prices. I think it's like $500 a month. So I don't think those prices are from Eli Lilly. I'd say it's probably the compounder, the version that Ro compounds as well.
So this is the slide that we've been talking about, and now you can see these two tabs here are now coming soon.
Yeah.
Is what we've been saying basically. Yes, people are commenting that the stock is getting crushed. We're down 16% to $43 a share. You never thought you'd see $43 again, guys, last week, and now you're here.
Oh, I
We'll
totally
see how it
thought.
does on the call.
Yeah, I thought we'd see 30s again. I didn't even know.
Yeah, exactly.
It's
Well,
it's up 74% now year to date, so it's volatile.
you might end up seeing 30s. Just give it another hour.
Yeah.
We'll see. We believe our ecosystem strengthens with each new subscriber. They have the tech platform, they have the trusted brand, the clinicians on site, and then the data-driven approaches to products and services. And then they go in depth on all of these categories. This is like a really cool document to just like read in your free time as well, because there's so much research and data packed into this that's not even specific to the company, but specific to like the vertical, I'm going to skip it for now. And we're going to jump to something that is, okay, here we go. In 2025, we will focus on 5 priorities to progress toward longer term vision. We believe our platform's potential over the next decade is immense. And in 2025, we expect to continue building the foundation to address that opportunity. Our priorities are as follows. Position Hims and Hers weight loss specialty to be durable long-term market leader. Integrate and leverage lab diagnostic capabilities to enrich the data and strategic insights available for consumers on our platform. Invest in affiliated pharmacies to increase the breadth of personalized treatments. Set the foundation for expansion into new specialties. Expand the depth of technological capabilities available to consumers and providers. So you have the liraglutide here, but they have no date on it. Commercially available semaglutide dosing in May 24. Personalized semaglutide dosing in July 24. And then, so this is the trajectory of their weight loss solutions. And then liraglutide is no date here as to when it's coming in 25. Let me see. Yeah, so they mentioned MedMatch here, where they want to extend the capabilities around what MedMatch can offer. And I think more and more you're going to see the integration of that data piece into the personalization aspect of their value proposition, which is, we've seen it already, but I think you're going to see it more going forward as they're gathering more data, right? So I think these next couple of pages are expanding on their guidance. 2025 outlook. We expect continued momentum in 2025 and progress toward long-term financial targets. 520 to 540 million in Q1, 2.3 to 2.4 billion in 25. Yeah, I think, Manuel, what were we saying? I think I was saying 2.3 to 2.5 billion in that video when we did the guidance estimates.
Yeah, can't really. But they beat the guidance was a good bit.
Yeah.
Assuming they'll achieve close to the higher end, which is like what happens.
Yeah.
Every time.
Weight loss revenue of at least 725 million in 2025. What's the little bookmark say? On February 21, 2025, the FDA resolved the semaglutide shortage, which could constrain our ability to continue providing access to compounded semaglutide on our platform once our current inventory has been sold. So they basically put a big asterisk on, if they can or can't get that 725 million in weight loss revenue. So that's going to be like a asterisk on top of their provided guidance for 2025, because if the FDA clamps down and then they say, hey, absolutely under no circumstance can you continue, then obviously that weight loss segment is going to be very limited. Okay. Roy and Manuel are very much in reading and posting right now.
Yeah,
So
I haven't posted much, but just reading through it.
Yeah, I'm just reading it as well.
Yeah, that's pretty interesting. The 2030 long-term goals, gross margin in the mid 70s.
what page? What
Uh,
page?
Just where you were right there. Scroll slightly up.
Yeah, that's the
Oh,
the
this.
expectation for a long time.
Yeah.
Yeah. No, it's I don't know. It's kind of interesting because GLP-1 and liraglutide, well, which isn't impacted by the shortage list at all. Like they're lower margin products, but it just kind of shows they're like, hey, this is what we're aiming for as far as margin. We're not willing, they're aggressive in cutting their products, not because it's a commodity, but just that's their whole model.
Mhm.
And yeah, they still make ridiculously good margin.
Mm-hmm. Yeah, I mean, it's still, man. Like, I think so we know that they consistently raise guidance as well, and if they're coming out of the gate with 50 to 60% revenue increase, 56 to 63% revenue increase for 25, I could see them ending the year with a real number that's closer to 65 or 70, just because we know that this company has a very consistent history of beating and raising, right? Um, good numbers, bad reaction. Like, yes, because this thing is such a coiled spring that it's going to go in one direction or another. It's so incredibly volatile. But I feel like we haven't really had the real reaction yet until we get through the call. Yes,
Yeah.
plus 15%, down 15%. I understand that you could argue that that's a reaction. A lot of that is driven by like algorithmic trading and traders, but like the real long-term investors who are looking at what they're guiding for next year, what they're guiding for 2030, and how they plan to get there. Like, I think that aspect is going to be way more important for if they want to continue building a long-term position or if they want to, like, if the thesis has essentially changed. So that's why I'm personally really looking forward to the earnings call, which is going to be coming up here very shortly in about half an hour, where we're going to hear from management. Because, like, you got to imagine 15, 16%, like Hims can make that up like literally tomorrow. So it's a bad reaction. Would I rather we were up 15 or 16%? Yeah, of course. But I think underlying all of that, what I'm looking for, and I think what the other gentlemen here are looking for, is really some guidance and direction around the company prospects over the course of the year with regards to that FDA decision on Friday. And so I think that's what the market is really going to be narrowing down on. Okay, let's take a look at this. Revenue up 95%. I'm really surprised that well, actually, I'm not. I had it in my estimates, but the monthly revenue per average subscriber went up that much, 73. Wow.
Yeah. I mean, a lot of that's GLP-1s though. So
exactly.
Actually, scroll slightly up. It said 73 growing year over year. Oh, I thought it said driven by. So never mind.
Yeah. New customer online revenue, repeated customer online revenue, and you can just see new customers are just killing it. I wonder if they're gonna drop any hints around that Super Bowl advertisement. Like, I know that's Q1 stuff, but if they're seeing some initial pop, like if they're gonna say something on the earnings call with regards to that, so that we can start to map out some like members or what that growth rate is gonna look like.
Yeah, I think that they probably will go into that. There's also a note on the CTO. This is on page 17 near the bottom. The quality of our engineering team has afforded us the ability to be selective in our CTO search. We are confident that we bring on a CTO in early 2025 with deep AI expertise that will enable us to deliver even greater value and insight for our subscribers. And
Cool.
I mean, like right before that, he's talking about the data infrastructure, and really that's what Hims is it's about the data more than
Right.
anything else, and just leveraging that for their advantage and for their users. So, but this isn't this isn't 2022 or 2023 where an AI mention is going to pump the stock. But I just thought it was interesting that they gave us an update on that.
Yeah, they've been looking for a good CTO for a while.
Mm-hmm.
Well, if Andrew's watching, I am available. Okay. Yeah, I'd be horrible as a CTO, I think. Yes. But okay, let's take a look at some of the expenses. Expenses seem to be going down, or at least staying flat, let's say. And then what is this? I was trying to read this. Okay, hold on. During the fourth quarter, yeah, so expenses are going down. And then here we have, so this was a one-off, the 76 million. And this would know AI if it hit him in the face. Doesn't even know down here.
Where's
Get
the
out.
personalized subscribers chart?
Personalized subscribers chart is
I can't really find it.
it not in here?
Yeah.
They only showed this.
Kind of weird, no?
Yeah. I mean, that's one of the reasons why I don't like their slide deck is things change and shift each quarter. It's not easy to go through if you're looking for the same thing as last time.
It's not in here.
Super weird.
That's kind of an important slide, guys.
There's no mention of personalized subscribers at all. Or personalized.
I was updating my chart of like as a percentage of total subscribers, how many were personalized, but
yeah, there's like very little mentions of the personalized offering altogether. Huh.
Yeah, that's not great. Let's see.
Why would they not be including that anymore?
I'm looking in the other document to see if.
Oh, wait, do they have another? Hold on, let me just pull this down for a second.
They got the press release, but it's not in the press release. So.
Yeah, it's not there as well.
Yeah. Okay.
And the webcast won't be up yet. So, yeah, that's not great. As a shareholder, I'll just say this: that sometimes when I see numbers disappear, and maybe it's like only 30% the case, but it usually means it's not good. Not always. It can also mean that that they found that there's a more important measure that it's no longer relevant. But usually companies will talk about this, and this is highly relevant. So just frankly, those are my initial thoughts. It's like I wonder if they were not good, which is not a good enough reason to not share this. So
I think Andrew will probably argue that like every customer is personalized or something like that. Because I mean, now as we were talking like during last episode, I mean, you will not choose an option without personalization if you pay the same. So probably every customer will be personalized. But I mean, it's just a guess. I don't like that they don't report it as well.
Yeah, I don't like that at all.
I mean, I hope they mentioned that, like on the call, the justification, because I know in the last earnings call they said, "Hey, this is going to be the last call or next earnings is going to be the last one where we do average revenue per subscriber." And so, if you're just removing more and more stuff, it's not great.
But... yeah, and just adding stuff about weight loss. I mean, it doesn't help to the thesis that it's more than a weight loss company.
Mm-hmm. Yes. Okay. I'm trying to find, because somebody posted on here that drug compounders just sued the FDA. but I'm trying to find if that's actually true or not.
Yeah, I'm looking to.
So if you can post a link, that'd be amazing. Save me some time, because that would be interesting as well. But I mean, I think we expected that to happen. It's the same playbook around when tirzepatide was taken off of shortage.
Yeah, I just found a link.
I've posted the link, he said.
Wait. I'm going to send you.
Okay. Okay, so just a reminder, the call is going to be starting in 30 minutes. We will throw up this link around the compounder lawsuit against the FDA, and then continue around the earnings shareholder letter, and then listen to the call together, which is going to be fun. Currently, the stock is down 20% to $41 a share. Roy might get his wish of seeing the 30s again very shortly.
Yeah. Yeah, I prefer not, but it's fine. Like, this is very volatile, and I figured it'd move, around 20% either direction. So yeah, what do you think of the timing? Well, did you pull up the FDA thing?
Yeah, let's get this link up and going. And then, Gurge, you can just DM me on X, dude, and then I'll throw it up. Or I don't even know if you can do it on
Yeah,
YouTube.
I can just throw up this one from Reuters.
Sure.
Right.
All right.
So the timing of this is probably not coincidental. Part of it is that this was recently removed from the shortage list, but I'm sure Hims is involved in this too. They're one of many drug compounders. They're going to argue, because I've seen this repeated by Andrew Dudham and also by a couple others as well, just that like they had some qualitative and some like survey responses of people basically saying it was difficult to actually obtain. And the FDA seemed like they were considering that and then removed it from the shortage list. Frankly, the FDA was going to get sued no matter what. Either it was going to be by the drug compounders or by Novo Nordisk and others. So I feel bad for the FDA. Like, it's got to just be terrible, because they're going to get like sued just all the time over this stuff. It's highly lucrative, and that's the reason why. So anyway, they've sued as of today. The lawsuit filed by Outsourcing Facilities Association, a compounding industry group, and others. I zoomed in way too much. Oh, well, they were saying, I lost it. I zoomed in and that didn't help. The lawsuit, okay, here we go. Filed by those folks, a compounding industry group, and others in Fort Worth, Texas. Federal courts claimed that the FDA's finding that there was no longer a shortage of the drug's active ingredient, semaglutide, was arbitrary and capricious, which, of course, they're going to argue that. And yeah, for this, if it actually goes through and removes a drug off the shortage list, my goodness, it's just all ads. I'm going to stop that. There's more to the article, and they covered up with ads, so go figure.
Classic Reuters.
Yeah. But yeah, it's not surprising. I don't know that changes anything for the FDA itself. When the FDA makes a decision, usually to get them to reconsider, you actually need some pretty hard evidence, and I can't think of too much that they could offer that hasn't already been made available. So, but maybe we'll see. In the long-term bull case, anyway, for Hims is not GLP-1 revenue, although I do think that they'll be able to keep some of that going through the 503As. But we'll see if there's any comments on that at all. I think that he'll get asked about that. Like, last earnings call was all about GLP-1s. This quarter especially, that's what analysts are going to ask about, probably every question.
Right. Okay. Wow. Lots of stuff going on. Man, it is definitely not a boring time with this name. just 2 minutes after the Hims earnings numbers dropped, we got this news around compounders suing the FDA.
No, but
So,
I think the article was like over an hour ago.
well, yeah, it said no, it said 4:07 p.m. We
Yeah,
got the
it dropped 2 minutes after the documents for HIMS dropped.
Huh.
Yeah, but the article from Reuters
Yeah.
said, yeah, it says updated 29 minutes ago.
Yeah.
Yeah.
So yeah, okay,
Right.
yeah, makes sense.
Um,
I thought it was still like 9:10 or something.
yeah, Jacob, honestly,
9
man,
4. Yeah.
being in this game for long enough has made me a total conspiracy theorist for short, for small float companies with low market caps. So, yeah, it was an hour ago in Portugal.
No, but yeah, if you Google it, like just Google the title of the news, like drug compounders sue FDA, blah 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 blah. It says literally 1 hour ago. Like,
Yeah.
so,
Well,
Yeah, I mean, we've been on stream for like 40 minutes, right?
depending on where you go, like the timing of those articles isn't always accurate. Like
okay.
that was one of those, like, people have conspiracy theories when they see things like that, and they'll go back to an article, be like, look, it posted before the event, and it's just because the technology is not great sometimes and are reflecting the actual time. So
Okay.
Reuters is
The
probably
Reuters
pretty
guy, the Reuters guy needs to type the article with his little fingers, and that takes time, you know. Like, they can't just use AI yet to do it for them. Should I sell Hims? Jesus is
Ooh.
asking. I don't know, man. Guys, what do you think?
if he cannot stomach this high of volatility, then probably yes.
Mhm.
You know, if the 20% drop is shocking, surprising, like you like it on the upside, but on the downside, then you just found out about yourself, and it's not a shameful thing at all. Like, everybody needs to know what works best for themselves. But if you're like, hey, I can't handle this volatility, don't invest in Hims then, because it's very volatile. It'll be volatile to the upside, but also the downside, and it's the most volatile thing that I earn. It actually makes crypto look boring.
Yeah. Yeah. If
Yeah.
this price action does not make you excited because you're so confident in the prospect of this company moving forward and in the fact that they're consistently beating their numbers and posting great guidance, and if it actually makes you panicked, then that's probably a sign that this roller coaster ride is a little bit too fast for you, and that's okay. Everybody goes at their own speed, but I mean, this thing, like, even today, right? It was down 11%. It went back up to +7, and then it closed the day at like plus, 4, and then it's down 17. And it's basically like a shit coin at this point, or at least how it trades.
Depending on the comments and the what happens with the market, like, I could see us ending Friday like above 50. I could see us ending Friday below 30, and neither are ridiculous scenarios. It's just, that's Hims for you. So every new investor always thinks that they can handle all the volatility in the world, but you don't actually know that about yourself until you experience it. So yeah, if this is causing anybody, like, you take some, I wouldn't make a decision based on emotion right now, but just remember how it feels. Take a little bit of time, and if you're like, hey, I don't want to ever go through that again, look for an exit, and that's fine, and find something less volatile. Pretty much 95% of stocks out there are less volatile. So
realistically, we're ready to lose all our investment. Just wondering, what would you guys do? Are we buying the dip? So I think depending on what management says on the call today, that's probably going to dictate how heavy I buy this dip. Obviously, I want to read the report more in depth for more interesting findings there. But really, like I said, I've repeated a couple of times, I'm really looking for clarity around how do they plan to navigate the situation around the FDA decision, and that, like, more clarity around that asterisk that I had included in the 745 million in expected revenue from weight loss in 2025. If they can provide some clarity there, which I'm sure they will. Last earnings call, I don't know if you were watching the stream or not, the last earnings call, like all of the investor questions were GLP-1 related. So analysts really love that aspect of the business, and it's understandable why. It's an absolute cash cow. But I personally am buying the dip, whether I like to or not at this moment, because I have cash secured puts and I'm fine to get assigned, but I'm going to be writing more probably tomorrow.
Yeah, I need to hear more details to know whether or not I'm buying the dip, because I already, bought some of the dip back at 50, and I was fine doing that. Obviously down, so in hindsight, it would have been better to wait. But I still have, let's see what percentage is that. I still have about 20% of my. So I sold about 40% of my HIMs. Basically, like I bought half of that back already. The other half I've not. So. If I like the details, if we get the level of detail that I need there, and like what they say, then I have no problem. Probably looking to enter again with the rest of what I sold out of, like in the 30s, mid 30s.
Yes, I would be buying that fairly heavily. If it fell
honestly, if it goes, I'm sorry, Tevis.
No, go ahead.
I was going to say, if it goes below, like if I buy the rest and I have my original position at 35, I've made some gains, which is great. If it keeps falling, and it definitely could, especially depending on what's happening in the macro, if the market continues to shift away from into risk adverse mode, like HIMS is one of those that the market will pivot away from. So, we could see it lower than that too. I wouldn't mind actually even adding more heavily than I initially had my position at. So. I ended up selling. You'll like this, Tevis. No more GameStop. I sold out of all of my swings today, just because I was like, hey, I think that there's going to be a opportunity for adding into higher quality names right when the market initially gave a little bit of bounce. I'm like, all right, I'm getting out of this. So exactly. No, I'm saving some for PayPal, looking to see if it'll sell off even more. HIMS also, and Robinhood are the three. So
I find this comment really, I find it ironic almost, because I see it the opposite way. Like PayPal literally is not going anywhere. HIMS can be at 100 or it can be at 20 by next week.
Best comment of the year.
Investor Days tomorrow morning for PayPal.
Oh, so right. Of course.
It definitely, they have that. And then Mark Grather, who is the basically the architect behind the advertising platform, he is presenting Wednesday as well. So they have like back-to-back, I think,
exciting
catalysts
world,
that
baby.
The market is not, like, people are like, oh yeah, the market's already priced out. Dude, PayPal's price action has been that. So no, nothing is priced in. It's all opportunity there. Macro could do anything, but no, I think PayPal is like, if you're looking for a stock that's like the opposite of HIMS, where you can just like hold it and not have to worry about what you're holding and the volatility, yeah, that's PayPal.
Yeah. All right. The call is going to be in 15 minutes. 15 minutes until we hear from management. I am going to take that time to get a drink, first of all, and then I'm also going to figure out how I'm going to throw this call up so that we can share collectively, and then we'll all listen in. HIMS is currently down 18% at $42 a share. Picked up a little bit off the lows of $40 a share, but I wouldn't be too concerned about it. Let me get a drink. Manuel will keep you entertained, and I'll be right back.
Whoa. Run an ad, Ben. Run an ad. We won't do it in the main thing, but we'll just run one right here.
All right, I did it. Be right back.
So did anything stand out to you that was surprising in the earnings slide deck so far?
I mean, I'm still wondering, where the hell are the personalized subscribers?
Yeah, that I was going to say was the only surprising thing. Everything else is just pretty much.
Because I mean, they kept the multi 30-day subscribers and all that, but
especially because it was such a significant slide too. So
yeah,
if I had a chance to ask him a question, that would be my main question. Is
I'm sure they'll ask. Someone will ask.
Yeah,
someone will ask, and if not, you can always email IR or just like tag Andrew directly.
Yeah,
I'm sure. We'll see.
Yeah,
I mean, we're gonna have to run multiple ads, I think, throughout this. By this point, like, our net worth is just going down the drain, baby.
Yeah, that's right. We gotta have some money to buy the dip there on him. So $2
Don't worry,
at a
guys.
time.
Yeah, only
I'm
25
getting
ads by
poorer
share.
each minute.
Yeah. Who commented Tev needs a cocktail? Rough day. Run a Hims ad. I've actually been people were saying that they were getting what was it, like Robinhood ads, I think, on my videos. And I was like, that's cool. Like stocks are well, I guess companies that we talk about are advertising on our channels.
Yeah, I mean, there's a lot of. I actually had YouTube Premium, and it was like the free because I got the Pixel, and for this month I'll probably re-up with it next month. But this month I like don't have a lot of time to watch YouTube anyway. But yeah, I watch it. I'm like, man, there's a lot of Robinhood ads. It's like half of the ads on there for me.
Yeah, they definitely know what they're doing. Manuel, you're so deep in thought. What are you finding for us? You found the non-personalized subscriber numbers missing. Anything else you found?
I mean, not yet. I'm
Not
still
yet.
really reflective.
All right, man.
It's like it was obviously a great quarter, but everyone expected that. So
Well, yeah, it was a great. I think the
it
guidance
was a great quarter, but not incredible. Let's say.
Yes, I think the guidance was definitely in line with my expectations, which are higher than the streets. I think the actual results were lower than my expectations, and more
I
closer
thought
to
free cash flow would be higher because of GLP-1s and deferred revenue.
Yeah.
I thought it would be way higher, to be honest. How much was it for the full year?
I got the earnings call up on my other screen, guys. I will share the screen when it starts. Right now, we're just hearing music. I might be like the first one there. We're 12 minutes early, but I just wanted to make sure it worked first and foremost. Let's see. Free cash flow bothered me. Can you walk me through a little bit, Manuel, why the free cash flow is bothersome?
If we look at like last year, the fourth quarter usually sees like a significant decrease from the third one. So if we look at it that way, we can say that it was kind of expected. Let's see.
Right.
But I mean, last year we didn't have GLP-1s, and I was expecting, as usually, they pay like 12 months, like right away because of the prices. It's way cheaper. I was expecting this time the free cash flow to increase quarter over quarter, or at least to remain somewhat stable. Let's say it's still like incredible to grow like almost 500% year over year, but with the accumulated deferred revenue that we were like seeing in the prior quarter and all that, I was expecting a bit more. It was full year was like $200 million free cash flow for the full year.
198 million. It's a 322% year-over-year increase, but the increase doesn't really matter because it's a small number before. Next year's increase will actually matter.
Yeah, exactly. 200. I think a few months ago my estimate was like $230 million, so it was kind of a bit under that.
Yeah. Drew says it could just be investments we don't know about yet.
Yeah, they said they were going to increase capex, and if you can clearly see that the capex increased, like the operating cash flow remained stable quarter over quarter, but because of the capex, the free cash flow declined. So
right,
actually, it's a full year thing.
Well, they bought two businesses. They bought two businesses in Q1. But in the last quarter, they did buy their 503B facility, if I'm not mistaken.
Yeah, here that is. They had a $24 million purchase of property, equipment, and tangible assets in investing activities. So that's going against their free cash flow. So that's part of the reason the drag. Actually, that's most of it. It would still be down a little bit, but not by as much. So yeah, that's the main difference right there.
So that 24 million is the 503B facility, correct?
I believe
they
so.
They paid like 30 million for it or something like that. I can't remember correctly because
they paid 31 million, so I don't think it's that.
Well, this is net, so investing activities, is a positive. So it could be that.
Yeah, they also made an offering to fund like a third of the purchase price or 2/3.
Right.
Remember, like the offering they.
So yeah, it could definitely be the actual purchase. CNBC blaming 184 basis point gross margin miss for the stock reaction, 77% versus 77.8, 78.4. This is why watching. No, this is why watching this show is more educational for you than watching.
My estimate was 77%. You remember? Like I literally said.
Where do you think they get the number?
77, like 78 the most. I mean.
And they've guided on this too, right? This is not something like the CEO's talked a lot about this. So no, they're sometimes larger outlets, especially, but I mean, like anybody can do this, where you just are looking for a reason why it fell down, and then when you think you found one, you post it. But this is a dumb reason. That's not.
Can you imagine falling 18% because your gross margin is 184 basis points lower than expected?
Well, no, it's exactly as expected. It's just not expected by CNBC, I guess.
And it's still close to 80%, man.
Oh my gosh, man!
It's not like it's a low margin business.
No, if they like put like free cash flow is lower or no concrete mentions of like that, fine, fair enough. Or they removed Manuel's personalized slide, like that's right. Negative 18%.
Crazy, dude. It's like the stock was up 150% at the peak, and it's taking a breather because it had a lot of built-in expectations. And now there's also an added line of uncertainty because one of their bigger business lines of GLP-1s could be going away potentially. And then they're like, nah, it's probably not that. It's probably the gross margin, 180 basis point decline. Oh my gosh. CNBC, bro. All right. That's funny. Okay, call is in 6 minutes. 6 minutes until the call. I have it up, so don't go anywhere. We're just hearing music in the background right now. And I'm curious to see what questions they chose for the retail investor portion, because they took questions from retail investors. I did email them 2 questions. I know a couple of other retail investors also did the same. I know the Hims House guys also compiled a bunch of questions for management. I'm curious to see what they went with. One of my questions was mostly around 2025 product initiatives and what they plan to release. So they actually provided a lot of clarity on that on the earnings report, several pages worth, which I'm going to read probably tonight and make a video recap tomorrow. But yeah, I'm really curious to see what they chose from retail. I love the fact that they are interacting more with retail, and Andrew said he wants to make a more meaningful effort to do so in 2025 as well. So that could be fun also. Very excited for the call. Why is it down? Go to CNBC for that answer. Him said they expect 10 million subscribers within the next 3 years. 10 million subscribers. Is this in the earnings report, like the report that just dropped, or is this something that they've said previously? Let me know.
Wait, what the hell?
Hims is slowly uptrending now. Yeah, honestly, guys, when the call starts, you're going to see a big uptrend or a downtrend. So I wouldn't really hold my breath here. Just wait 5 more minutes, and then you'll hear all about it.
Yeah, I'm not seeing the 10 million, and maybe it's in there. I'm now looking at the shareholder letter, and Andrew had said over 2 million subscribers now trust Hims and Hers to aid them in their journey to better health, with thousands more joining daily. and that's kind of insane.
Did they provide member guidance for full year 2025? Subscriber guidance for?
No. They never give guidance for subscribers.
Because now they're not going to be giving average revenue per subscriber, and if they don't provide subscriber guidance, and if they don't provide personalized subscribers, like guys, like we need these because these are leading indicators for us to forecast the business in a more like direct way, right?
Yeah, they're at 2.2 million.
Yeah. All right. Let me buying Celsius. Always coming through. He saw me drinking the Celsius. This is why I re-upped on my Celsius purchase. This is what is commonly known as an enabler right here. Yes, like and subscribe. Looks like they took another 3.7 million in income tax benefit. They probably might have done that just to beat EPS estimates, because EPS was like barely scraping by with the beat. I'm not sure though, because they took the majority of that in the last quarter, which was why we saw a huge jump. Manuel, what do you think?
Maybe you said they took advantage of that to beat.
Yeah, it's on the
EPS?
screen. It's on the screen. Yeah, it looks like they took another 3.7 million in income tax benefits. I was saying maybe it's to beat EPS because it's like
Yeah, but
barely beat.
3.7 million is
Negligible.
really irrelevant, I'd say.
Yeah.
So yeah, this is page 18. Our expectation is that weight loss offerings such as our oral solutions, liraglutide, and personal semaglutide will contribute at least 725 million of revenue in 2025.
Yeah. And then
Even
they
in
have
light of this momentum, we believe that the offerings other than weight loss will continue to comprise the majority of our revenue in 2025 and be critical to our long-term success. And that's exactly right. Like they will get into, depending on how much the GLP-1 revenue does slow off, it like the 725 million, we don't know like what percent is, the breakdown for each of these. And they may not, be confident enough in the guidance, like to put out there, like knowing what the demand is on liraglutide. Like there'll be some, but there's drawbacks for each of those other products. But yeah, I mean, it's not about the GLP-1s. It's just that was a super, super nice sugar rush of revenue for a company. And they're using that, I think, to fuel acquisitions.
I'm looking at this comment here. It says on page 11, they said that 55% of customers are, at the end of 2024, more than 55% of our subscribers were opting for personalized treatment. And our belief is that that number will continue to grow.
Thank you. Yeah.
Yeah, I think that's the only thing that we know so far about the personalized
And it was
subscriber.
is it like
It-
51, 52?
50.5.
50.5. Okay. So rounded up 51 before. So yeah, that's good.
It's
Yeah,
good, but it's
yeah.
kind of much less than like of an increase than prior quarters. Like last
Yeah.
quarter,
Well-
they increased like 10% from the prior one. So now they increased like 5%. So maybe
Yeah. Well,
and
some of
I
that,
can plot that out to see how much subscriber growth we had, because you can just work backwards and put 55% there.
and a lot of that was a timing of certain things. So they launched personalized GLP-1, which a lot of people were able to take advantage of that in one rush. Versus this quarter, I don't know that they announced any new personalization that wasn't already there, and then they ramped GLP-1, which wouldn't be, So a little
right.
bit of a decrease from the prior quarter when they on a major product they're like, hey, we can personalize this now, is kind of expected.
I just found something interesting. Like the marketing expenses actually decreased as a percentage of revenue from like if it's gap from 51% to 46%, which is pretty nice because not too long ago, like before GLP-1s, the bear case was like Hims just survives based on marketing. That was the bear case. I remember like a short report issued when Hims was at like $5 or $6 per share, which was essentially saying that Hims will never make a profit because they have huge marketing expenses. This is just like a marketing company and so on. So like,
So we still only have music right now. I'll put up the screen when the call is actually live.
All right. I'm going to get a refill of my water. You know what time it is, Tevis?
Yeah, super quick ad break, then we have uninterrupted call.
Be right back.
All right, call is starting now. Let me know if you guys can hear it okay.
Earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session.
Yes.
If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, simply press pound key or star 2. Thank you. I would now like to turn the call over to Bill Newby, Head of Investor Relations. Please go ahead.
Good afternoon, everyone, and welcome to the Hims & Hers Health fourth quarter and full year 2024 earnings call. Today, after the market closed, we released this quarter's shareholder letter, a copy of which you can find on our website at investors.hims.com. On the call with me today is Andrew Dudum, our co-founder and chief executive officer, and Yemi Okupe, our chief financial officer. Before I hand it over to Andrew, I need to remind you of legal safe harbor and cautionary declarations. Certain statements and projections of future results made in this presentation constitute forward-looking statements that are based on, among other things, our current market, competitors, and regulatory expectations, and are subject to risks and uncertainties that could cause actual results to vary materially. We take no obligation to update publicly any forward-looking statement after this call, whether as a result of new information, future events, changes in assumptions, or otherwise. Please see our most recently filed 10-K and 10-Q reports for a discussion of risk factors as they relate to forward-looking statements. In today's presentation, we also have certain non-GAAP financial measures. We refer you to the reconciliation tables to the most directly comparable GAAP financial measures contained in today's press release and shareholder letter. You can find this information as well as a link to today's webcast at investors.hims.com. After the call, this webcast will be archived on the website for 12 months. And with that, I'll turn the call over to Andrew.
Thanks, Bill. What an incredible last few months we have had to finish a breakout year. At Hims & Hers, we believe we are building the next generation healthcare platform. A platform that leverages personalization and technology unlike any traditional healthcare system, delivering access to affordable, on-demand, high-quality, and precision-tailored care to millions of people. The future model of health and wellness that centers around the consumer and the consumer alone. This vision requires extraordinary levels of innovation across technology, infrastructure, and services. And I'm absolutely in awe at the team's execution across so many avenues to accelerate towards this vision. From our recent acquisition of our new whole body lab testing facilities, which will bring Hims & Hers customers a deeper understanding of their comprehensive health and treatment personalization, to our acquisition of our new Menlo Park peptide facility, which will establish domestic durability of our supply chain for one of the most innovative and exciting areas in medicine, to our Super Bowl ad, which sparked an incredible breadth of discussion around our existing healthcare system, and lastly, to our growing bench of impressive talent, making our team an even stronger competitive advantage. We are attracting leaders across disciplines from technology to women's health, who recognize the extraordinary opportunity to reshape American healthcare. At the end of 2024, over 2 million subscribers entrusted Hims & Hers to aid them in their journey to better health, with thousands more joining daily. This vision of an on-demand, personalized healthcare platform is resonating with consumers across America. Over the past 25 years, Uber and Airbnb reshaped transportation and hospitality. Amazon and Shopify revolutionized e-commerce and logistics. Netflix and Spotify redefined media consumption, and PayPal and Square modernized digital payments. Yet we haven't seen a similarly transformative shift in one of life's most critical areas, healthcare. Recently, however, I've felt the same sense of disruption and possibility with what we are building at Hims & Hers. These disruptors introduced a concept of on-demand in a manner I had never experienced, hyper-personalized and catered to my needs, transparent in their pricing and ultimately reliable and empowering. These are words never uttered when describing healthcare in America. At Hims & Hers, our ambition is simple. We plan to change that. We have been breaking the status quo since our founding in 2017. And through our vision of what healthcare can and should look like, we've achieved a breadth of accomplishments that few thought possible. We've engineered a vertically integrated proprietary technology stack that powers over 10,000 patient visits per day, and we believe is home to one of the most powerful, completely closed-loop data sets in healthcare. We've built nearly 500,000 square feet of cutting-edge pharmacies and fulfillment centers that deliver personalized treatments across dozens of conditions and multiple innovative form factors, helping support high-quality clinical outcomes through optimized dosing, side effect mitigation, and vitamin supplementation. And we've broadened our brand from one that focused on niche men's categories like ED to one that millions of Americans entrust for their health and wellness needs across an ever-broadening set of specialties, from men's and women's health, dermatology, mental health, adjunctive cardiovascular support, and most recently, metabolic health. We are in the earliest of days in transforming how Americans improve their health and wellness. And when we think about the future, our investment areas fit into simple yet powerful buckets. First, by leveraging advancements in technology, specifically AI, we can expand the scope, quality, and capabilities of diagnostic tools available on Hims & Hers platform. Second, as our technology gets more sophisticated and we bring more data-rich integrations onto our ecosystem, like lab testing and wearable devices, we can expand the breadth of personalized treatments, including preventative capabilities, accessible on our platform. Third, by focusing on the long-term consumer journey, we can expand the value of the Hims & Hers relationship with improved offerings that drive increased and higher engagement follow-up care. And fourth, as our verticalized capabilities and platform get stronger, we see a path to export our capabilities beyond the walls of Hims & Hers, helping legacy healthcare enterprises transform to be capable of delivering the same quality, efficiency, and personalization for their patients. Our recent investments are in lockstep with this future vision, helping to position us to execute across each of these critical areas. Data is a key differentiator on our platform, as we are one of, if not the only, large-scale, vertically integrated health systems spanning the end-to-end patient journey. At the end of 2024, we began negotiations to acquire a provider of at-home whole-body lab testing, which we were excited to close last week. With this additional capability, we will be able to test for a wide range of critical biomarkers across heart, hormone, liver, thyroid, and prostate, helping to proactively identify individual risks for disease. We believe this type of comprehensive health testing should be available to everyone, given the possible life-altering learnings. Given this, we look forward to expanding the value each Hims & Hers subscriber receives this year with comprehensive testing at extraordinarily affordable costs to our customers. Whole body testing gives providers even more insights into their patient's health, enabling a more holistic, individualized treatment plan, inclusive of personalized medications, supplements, workout routines, and nutrition. Whole body lab testing will also enable us to expand into specialties such as menopausal support, low testosterone, and more. With this acquisition, we are elevating the personalization of care individuals will be able to access on our platform. Expanding data sets enable us to identify elements of a member's health, such as vitamin deficiencies and unoptimized health indicators, leading to better personalization of treatment through expanded offerings that take these diagnostic components into account. As we deepen the personalized care we can offer, investments across our nearly 500,000 square foot footprint across Ohio, Arizona, and California will set the foundation to potentially move from offering hundreds of personalized treatment variations to eventually offering thousands of treatments over the coming years. At the end of 2024, we also signed an agreement to acquire a California peptide facility. As we work to address chronic conditions and areas of need among Americans, This facility will provide the ability to explore innovative advances in preventative health, metabolic optimization, cognitive performance, recovery science, and biological resistances. I'm thrilled with the potential range of treatments in peptide science, and we are committed to being at the forefront. We believe that this acquisition will provide us with opportunities to more closely participate in this innovation and also bolster our domestic supply chain for treatments that could be critical to America's future. As the breadth of treatments and services expand in our platform over the course of the next decade, our belief is that advancements in technology can facilitate materially better outcomes and unlock a level of access unlike anything available today. We believe that AI and scaled de-identified data will help power extremely important network effects for our platform, enabling each new customer's experience to drive improvement to the care and experience of the next. We also believe that leveraging AI and our current clinical expertise and intelligence can elevate the types of follow-up care available for millions of individuals. We see great healthcare as a combination of appropriate treatments, high-frequency provider support, and access to services that help individuals achieve healthier habits. In 2024, we launched tools such as BMI calculators and trackers to help members monitor water intake, nutrition, movement, and sleep, all focused on helping our subscribers build a healthier lifestyle. In this next generation of healthcare, we see a world where AI can substantially elevate the subscriber experience by providing resources with greater sophistication, such as AI coaches, therapists, nutritionalists, and trainers, available for 24/7 on-demand support to help our customers make meaningful lifestyle changes in pursuit of their health and wellness goals. Trusted and empathetic AI-powered care coordinators to help customers navigate their healthcare journey, and greater transparency and visibility into the reasoning that drives each treatment and service recommendation on our platform in a manner not constrained by the availability of provider time on the platform. While our ambitions and technology advancement are far-reaching, we have been energized by the market receptivity to this vision. Leading engineering executives, world-class AI researchers, and operators responsible for building and massively scaling some of the most notable businesses in the world have been part of our year-long search for our Chief Technology Officer. We have been humbled by the shared excitement for our vision and the widespread passion to transform the American healthcare system. We are thrilled to share that we have signed an offer for our new Chief Technology Officer, and we expect to share more about our latest executive team member in the coming weeks. Our focus in 2025 will be on continuing to further progress our platform capabilities, deepening our competitive moats, and expanding our value to customers. We will do this through continued execution across 5 key priorities. First, through the integration of whole-body lab testing, we will provide access to richer insights for consumers into their health. I cannot stress the transformative unlocks we believe will come from empowering customers with their data. Diagnostic capabilities will serve consumers by supporting our expansion into additional specialties such as menopause and low testosterone, and pave the way for a greater breadth of personalized offerings, inclusive of medications, supplements, and lifestyle changes. Second, we will continue to invest in our pharmacies and infrastructure. These investments will come in the form of expanding our capacity for sterile compounding, as well as further automation of facilities to unlock the capacity to offer access to thousands of more highly personalized treatments in the future. Third, we will broaden and deepen the capabilities of our technology stack to facilitate even better recommendations from providers to each individual patient, as well as lay the foundation for AI-centric tools and coaches capable of even further improving the quality of follow-up care received on the platform. And fourth, we expect to conduct R&D for the launch of future specialties and subspecialties that leverage our capabilities and reach an even broader set of customers. And finally, we will continue to position ourselves to be a leader in addressing the chronic obesity epidemic across America. There may not be a more impactful use case for precision medicine than America's obesity epidemic, which impacts 100 million individuals across the country and results in 500,000 preventable deaths per annum. North of 200,000 individuals joining the Hims & Hers platform in the span of a year to meet their weight loss needs is evidence of the benefits that consumers see in our approach to personalized medicine. As we shared last year, we believe our approach can enable material improvements in clinical adherence and compelling customer satisfaction, and we're seeing gains in the realization of this goal. In order to truly address the epidemic, patients need comprehensive care that extends beyond medicine to making lifestyle changes, from nutrition to exercise to mental health, and we are dedicated to this approach. Precision medicine is about using the right tools for the right patient at the right time. We believe this approach to personalized medicine will ultimately drive better clinical outcomes by enabling providers to personalize the dose, form factor, and other clinical delivery aspects of existing clinically validated medications. In our work, we are committed to integrity and transparency. We are not bypassing the regulatory process, nor are we creating new drugs. The regulatory framework for compounding and the FDA have long recognized the need for compounders to be able to compound medication to meet patient needs that utilize ingredients of, but that are not essential copies of existing drugs. We focus on providing access to better care in this framework through personalization, period. We believe that Americans deserve transparency about the system and their options, and we will continue to passionately push back against any attempts to confuse or scare consumers about whether compounding can be done legally and safely. We won't claim improved efficacy until the data substantiates it. We will continue to show our quality and safety process across every step of the customer journey. We take a logical approach that lets patients and providers draw their own conclusions because we believe that patients, not pharmaceutical profits, should drive our healthcare system. We are aware that change can be scary for industry incumbents. Big Pharma's reaction to our call to fix today's stuck and sick healthcare system has been to band together and question the need for affordable compounded solutions and incite fear in regular Americans through broad stroke statements about the safety of all compounded medications. As always, we will continue to monitor and comply with regulatory requirements related to the GLP-1 shortages. And we will continue to primarily focus within our weight loss category on bringing care to individuals that stand to benefit from our oral-based offerings, liraglutide later this year, and clinically necessary personalized dosages of semaglutide. The investments we've made on our platform will help ensure that we can effectively help the millions of potential Americans that can benefit from our holistic approach to weight loss treatment. Additionally, these investments position us to be a leader in providing access to high-quality treatment to millions of more Americans as more brand-name GLP-1 medications go generic in the coming years. As a founder-led company, we have one rare advantage that most companies do not: extreme patience. While most might get lost in the noise of today's realities, the future is where we are focused. A future where high-quality, personalized care is available to everyone on demand at affordable prices from the comfort of their home. This vision is coming to reality and it's shaking the incumbent system. We believe that in the coming years, that future will be obvious and available to all. We look forward to updating you on our progress across these priorities over the course of 2025. With that, I will pass it over to Yemi to talk through our financial performance and outlook for 2025.
Thanks, Andrew. I will start by providing an overview of our fourth quarter financial performance before diving further into our outlook for 2025. The success of our platform in 2024 is a reflection of how our ability to democratize access to high-quality personalized treatments and services is resonating with consumers. Revenue was $481 million and $1.5 billion for the fourth quarter and 2024 fiscal year, respectively. This represents year-over-year revenue growth of 95% for the fourth quarter and 69% for 2024. Helping drive our success is our ability to attract and retain subscribers across our tenured specialties, and secondarily, an ability to scale new offerings such as our weight loss treatments. Revenue outside of our GLP-1 offering increased 43% year over year to $1.2 billion in 2024, reflecting an ability to achieve the floor of our revenue expectations for 2025 a year early. Expansion of personalized treatments on our platform is continuing to result in strong subscriber growth. Total subscribers on the platform increased 45% to over 2.2 million in the fourth quarter, with over 55% of those subscribers subscribing to at least one personalized solution. Unique form factors, multi-condition treatments, and personalized dosages are unlocking growth in some of our most tenured specialties and serving as an accelerant for some of our newer specialties. For example, in the fourth quarter, subscribers in men's and women's dermatology grew over 55% and 100% year-over-year, respectively. Our belief is that lab diagnostics will unlock a greater breadth of personalized treatments, which will further expand the runway for growth across our existing specialties. Almost 100 million Americans are currently struggling with weight loss. We launched an oral-based weight loss offering in the fourth quarter of 2023, which saw great success as it scaled to a revenue run rate of over $100 million in just over 7 months. Our GLP-1 offering, which launched in the second quarter of 2024, has experienced similar success, delivering north of $225 million of incremental revenue in 2024. We believe success behind this offering is a result of the brand equity we have built over the years, as well as our high-touch model that includes frequent provider engagement, tools to build healthier lifestyle habits, and access to personalized treatments. Line of sight to future operational efficiencies gave us comfort to make our injectable offering even more affordable. We reduced the price for our 12-month SKU from $199 a month to $165 per month in December. The majority of weight loss subscribers are now opting for treatment plans of 6 months or more, which we believe will translate into strong retention and improved adherence for our weight loss subscribers. Similar to previous strategic pricing actions, we are confident that these changes will be long-term accretive to the platform and provide a path to unlock economies of scale in the future. Additionally, we believe that the ability of providers on our platform to personalize successful titration plans and steady-state dosages strengthens with each subscriber that has success on our platform, making our ability to rapidly scale a distinct competitive advantage. While the addition of subscribers remains the primary component of our growth, monthly online average revenue per subscriber is becoming a more meaningful contributor as well. Monthly online average revenue per subscriber increased 38% year-over-year to $73 in the fourth quarter. Scaling of GLP-1s, as well as subscribers shifting to more premium personalized offerings, are the primary growth drivers. Significant investment was made in the fourth quarter in areas that we believe set the foundation to drive future economies of scale. Despite this investment, adjusted EBITDA margins remained strong at over 11%, as adjusted EBITDA increased over 160% year-over-year to $54 million in the fourth quarter. For the fiscal year of 2024, our platform delivered $177 million of adjusted EBITDA, as adjusted EBITDA margins more than doubled year-over-year to 12%. Gross margins declined approximately 2 points quarter-over-quarter, in line with expectations highlighted earlier this year. The scaling of our GLP-1 offering, as well as strategic pricing actions enacted within our GLP-1 offering in the fourth quarter, are the primary drivers of this change. We expect margins to start to recover in the second quarter as we reach milestones for pre-adjusted volume-driven discounts across our operation, with further opportunity as we expand sterile fulfillment capabilities within our affiliated facilities later this year. In the fourth quarter, we leaned into specialty-specific marketing on national stages at scale for the first time. Marketing as a percentage of revenue in the fourth quarter was 46%, representing a 5-point improvement from the prior year and a 1-point degradation from the prior quarter. Higher retention as a result of an increasing shift toward personalization, as well as acquisition of customers organically and through lower-cost channels, continues to provide confidence in our ability to achieve between 1 to 3 points of leverage on our marketing spend per annum. For the fiscal year of 2024, we exceeded this goal, driving marketing as a percentage of revenue down to 46%, reflecting over 5 points of leverage relative to the prior year. Strict management of our operating costs continues to allow us to gain leverage on our G&A, as well as operations and support costs. In the fourth quarter, G&A and operations and support costs as a percentage of revenue improved 3 points and 1 point year-over-year, respectively. Net income was $26 million in the fourth quarter and $126 million for the full year, marking our first full year of GAAP profitability. The full-year figure included a tax benefit primarily related to the release of a domestic tax valuation allowance, partially offset by current period tax expense. Cash flow generation remained strong as we delivered nearly $60 million of free cash flow in the fourth quarter, bringing the total free cash flow generated in 2024 to nearly $200 million. Cash and short-term investments on our balance sheet were over $300 million at the end of the year. 2024 was an exceptional year for Hims & Hers, but as Andrew mentioned, we believe that we are just scratching the surface of what our platform can deliver in the years to come. Before going into our outlook for the year, I will provide insight into how we expect to allocate capital in 2025. We expect more capital investment across a few key areas in 2025 to continue building toward our long-term vision for the company. These areas include, first, an investment in expansion of sterile capabilities and capacity within our 503A and 503B facilities. These investments will ultimately enable us to more economically provide offerings such as liraglutide on our platform, which we believe will further enhance the durability of our weight loss offering. Additionally, sterile capabilities provide a critical component necessary to expand into other areas such as menopausal support and low testosterone in the future. Second, we are investing to expand capacity for a greater breadth of personalized offerings through investment in equipment with increased automation capabilities, as well as the launch of a larger facility in Arizona later this year. Our ambition is to have the capacity to leverage additional de-identified data points from interactions on our platform and lab diagnostics to increase the depth of personalized treatments available to subscribers, whether that be through additional form factors or multi-condition treatments. Third, we expect to integrate lab diagnostic capabilities into our platform in a way that allows us to offer it to subscribers at a low cost or in some instances for free. We believe lab diagnostics can be an additional value-add service for subscribers that serve as a foundation for more personalized treatments, as well as enable expansion in other specialties in the future. Lastly, we will continue our focus on strengthening the long-term durability of our domestic supply chain through investment in our recently acquired peptide facility. We view this facility and peptide capabilities as providing an additional long-term anchor for our focus on U.S.-based operations, as well as an opportunity to explore innovations in medicine made possible through peptide development in the coming years. Similar to prior years, we will be thoughtful in our allocation of capital across these initiatives and expect to continue to deliver strong free cash flow in the future. With that backdrop, I will provide an additional perspective into our outlook for 2025. In the first quarter, we are anticipating revenue in the range of $520 to $540 million, representing a year-over-year increase of 87% to 94%. We expect adjusted EBITDA to be between $55 to $65 million, representing an adjusted EBITDA margin of 11% at the midpoint of both ranges. For the full year, we are anticipating revenue of between $2.3 to $2.4 billion, representing a year-over-year increase of 56% to 63%. It is our expectation that 2025 adjusted EBITDA will be between $270 and $320 million. These adjusted EBITDA and revenue ranges imply an adjusted EBITDA margin of 13% at the midpoint of both ranges. Embedded within our outlook are the following assumptions. First, given what we know today, we anticipate 2025 revenue contributions from our weight loss specialty of at least $725 million. This figure excludes contributions from commercially available dosages of semaglutide, which will not be offered on the platform after the first quarter. There may be the potential to offer commercially available dosages of compounded semaglutide throughout the year. However, we see our steady-state weight loss offering being primarily composed of our evolving oral-based solutions, as well as liraglutide later this year. Personalized semaglutide dosages will supplement these core offerings for the subset of consumers for whom it is a clinical necessity. Supply chain consistency across 2025, inclusive of affiliated pharmacy and third-party fulfillment and distribution dynamics, is a key assumption in our guidance. Second, our expectation is that the first quarter will remain an investment quarter as a result of the strategic pricing actions made in December and investment in our 1-Minute Super Bowl campaign. We expect some pressure on gross and adjusted EBITDA margins in the first quarter, but anticipate improvement through 2025 beginning in the second quarter. Line of sight exists to realize volume-driven discounts across our ecosystem later in the second quarter, and further benefit is expected as greater sterile fulfillment capacity from our facilities comes online throughout the year. Third, we remain committed to ensuring that our voice is heard during the most culturally relevant moments across America and expect to continue to have a significant voice for the most pertinent issues across healthcare relevant to our platform. Our expectation is that we will maintain a 1-year payback period on our investments while executing these activities. Additionally, We have high confidence in our ability to continue driving between 1 to 3 points of marketing leverage per annum as a result of, first, an increasing amount of our spend becoming semi-fixed in nature. Second, an ability to draw a broader audience and retain them as a result of high-quality personalized solutions available on the platform. Third, an increasing amount of customers acquired organically and through lower-cost channels as a result of historical investments in our brand, as well as entry into specialties more conducive to word-of-mouth referrals. And lastly, the continued maturation of additional subscriber cohorts on our platform. Marketing leverage is an instrumental component of our path toward margins of at least 20% by 2030, which we believe we are on track to achieve. Lastly, we expect long-term revenue retention to remain above 85% as subscribers engage with personalized products across more specialties. Ongoing subscriber adoption of personalized solutions present both acquisition and retention benefits across each of our specialties. Recent trends give us confidence that each of our specialties will deliver more than $100 million of revenue in 2025. Capabilities that were built organically, as well as recently acquired, provide a path toward an exciting future for Hims & Hers in 2025 and beyond. Investments that we make in 2025 will position us to transform the way millions of individuals optimize their health through the examples that Andrew highlighted for our long-term vision. Our ability to drive these strong results would not be possible without the dedication of over 1,000 employees across Hims & Hers. I'd like to thank them, as well as all of our customers and partners that support us in our mission of helping the world feel great through the power of better health. We appreciate the support of our subscribers and shareholders and look forward to keeping you updated on our progress. With that, I will now turn the call back over to Bill to kick off Q&A with 2 questions from our retail community.
Thanks, Yemi, and thank you to all the investors that sent us questions over the weekend. It's clear that that part of the investor base continues to expand, and we're excited to more regularly engage with this part of the group. To get things started, this was the top question from the Hims House, a retail community dedicated to Hims that is growing in popularity. The question is, what are the top 3 to 4 strategies that will allow Hims to reach tens of millions of subscribers on its platform, and what is the rough time frame for reaching this goal?
Thanks, Bill, and thanks, Hims House. It's been fun to watch you guys grow as a community. I think 10 million subs on the platform to me feels, really quite in reach, and I think, frankly, pretty straightforward from a growth standpoint. If you look at historical growth over the last 5 to 6 years, my optimistic hope and personally ambition would be to try to achieve this in the next 5 to 6 years. I think the top strategies are the ones, frankly, that the business is operating against today, which is, first to expand the categories and the specialties on the platform. So you'll see deeper segmentation, more indications. I think the lab testing acquisition this past week is something that will massively accelerate that breadth of conditions. The second, I think, is a broad expansion of the personalized treatments on the platform. And as we talked about in the prepared remarks, my ambition is really to go from a place where we have 300 personalized treatments which exist today on the platform to a place in the not so distant future where you've got thousands of treatment variations. And this is, hyper personalization across dosing, side effect mitigation, multi-condition support, vitamin supplementation, and ultimately form factor, which we know has a massive adherence contribution. So I think as you expand those personalized treatments, you're unlocking different groups of people who feel like there's something on the platform that better represents their needs. And then I think lastly, there's going to be a real accelerated investment in technology that's going to be necessary to empower this type of scale. Right now, as I shared, we're powering north of 10,000 visits on the platform per day. You need to be able to power 20 and 30 and 40,000 visits on the platform per day. And so there's a real necessary investment across decision-making tools for providers to help them be more efficient and more precise, more long-term capabilities with AI that allow the customer to have a higher touch experience after they've been treated, and more handheld throughout the long term of their journey. And so all of that, I think, is kind of a big area. So we're very excited from a technology standpoint to have our CTO joining and be able to share more about that offer in the next couple of weeks.
Thanks, Andrew. We kind of on that last point, we received a lot of questions on AI and its applications on the platform. This one comes from Stephen W., who asks, how is Hims leveraging AI and data analytics to enhance the telehealth offerings today? as well as the personalized treatments and drive increased efficiency in the healthcare ecosystem? Are there plans for AI-driven diagnostics or automation to improve patient outcomes?
Yeah, thanks, Stephen, for the question. Absolutely. Across both of those, both diagnostics and long-term patient outcome management, I think increasingly AI is at the core of everything that we're discussing as a management team. What we are building, I believe, is possibly the most powerful data set in healthcare, because it's really the only at scale, fully verticalized end-to-end system. So we are overseeing and managing not only the initial patient intake, but the diagnostic component, the treatment component, the long-term relationship to chronic care, the adjustment to treatment, and ultimately whether or not the outcome is delivered. And so that data set delivers a really powerful flywheel. I think what you'll see from a diagnostic standpoint is real investments in MedMatch, the ability to more precisely identify diagnosis for patients, but also personalized treatments for patients. I think you'll obviously see lab work be built into MedMatch in a way that expands the range of diagnostic capabilities and treatment capabilities. And then lastly, I think on that follow-up care side and on the patient improvement side, I think you'll see us meaningfully change the status quo for what it looks like to be a Hims & Hers customer long-term. One of the things that I think about a lot as an entrepreneur is what are things that the ultra-rich have access to? And then how can we broaden that and give that to everybody? So things that people have are on-demand therapists, right? They've got nutritionalists, they have fitness coaches, they have meditation coaches. These are people that are in your life helping you to live healthier lifestyles. I think we are capable of building incredible AI versions of all of those coaches, which really change the paradigm for how easy it is to change the lifestyle dynamics in your house and ultimately expand that to tens of millions of more people down the line. Now, at the end of all of this, I think what is maybe even the most exciting from an AI standpoint is as we build these fairly proprietary models internally and validate them internally across our data set, I think there's one day the opportunity to open this up and in partnership actually help power the existing legacy healthcare systems and help transform those legacy healthcare systems to actually be able to deliver the Hims & Hers quality and experience and personalization at scale. And I think that ambition is really exciting for us because it means that we're not only changing healthcare for the customers that are coming to Hims & Hers, but we're also one day possibly helping power the rest of the system in delivering great healthcare to others.
Great. Thanks, Andrew. Thanks again to all who sent in questions. We look forward to hearing from you again next quarter. And with that, I'll pass it back to the operator and we can begin the regular way Q&A.
Ladies and gentlemen, we will now begin the question and answer session. As we move into the Q&A session, we ask that you please limit your input to one question and one follow-up. At this time, I would like to remind everyone to ask a question, press the star button followed by the number 1 on your telephone keypad. If you would like to withdraw your question, please press pound key or star 2. One moment, please, for your first question. Your first question comes from the line of Maria Ripps of Canaccord. Please go ahead.
Great. Congrats on strong results, and thanks so much for taking my questions. First, I just wanted to ask about GLP-1 personalization. Can you maybe just help us understand some of the mechanics around assessing new patients when deciding if they're good candidates for personalized semaglutide dosing? I guess, especially for some of the patients that are new to GLP-1s and maybe haven't had experience with side effects. I guess, what's your approach to understanding if someone needs a personalized solution versus some patients that are being attracted to more affordable prices?
Hey, Maria, that's a great question. I think first off, we see a lot of patients that come onto the platform that have already experienced GLP-1s. And I think there's no shortage of data to support this. I think a huge portion of the population has started, tried, and unfortunately, turned off of them. And that data is quite public. A lot of it, as we've talked about, muscle loss concerns, extreme nausea, extreme vomiting. So what we do from a medical standpoint in partnership with our clinical advisors and clinical leaders is build the information and intake to allow for essentially an understanding of their existing situation, whether or not they've tried them before, their side effect sensitivities, There are nausea sensitivities. There's a tremendous amount of personalization with these medications with regard to actual goal weight loss, right? No individual body is the same. No individual person has the same ideal health outcomes. And so I think the idea of a single dose regimen for this medication, especially given the extreme side effect nature of it and also the extreme efficacy of it, is actually really well tailored. So with all of that information, that then gets piped into the EMR within the platform, served up to the provider, and in partnership with the provider's expertise and their experience, as well as MedMatch, which is able to educate the provider on similar patients with similar dynamics and how they've had great outcomes. Those decisions can be made between the patient and the provider.
Great, that's very helpful. And then can you maybe talk about how the shortage ending could impact the competitive setup and some of the dynamics among platforms that have been offering compounded semaglutide?
Yeah, I mean, we are pretty clear with regard to what the regulations state. So my expectation is most parties in market that have been offering commercial available doses of semaglutide will cease to do that in the next couple of months. Again, the FDA outlines very clearly when you can and cannot compound, one, during a shortage, which has now indicated is no longer. And then second, when there's a clinical necessity for that personalization through the A facilities. So I think on an ongoing basis outside of the next quarter, as commercial doses come out of the market, you'll see probably a smaller amount of personalization happening through the A for those that are clinically requiring that level of tailoring.
Got it. That's very helpful. Thank you very much.
Your next question comes from the line of Craig Hettenbach of Morgan Stanley. Please go ahead.
Yes, thank you. Outside of semaglutide, can you talk about just rough expectations for liraglutide in terms of possible timing for this year? And then also an update on the oral weight loss drugs. You've mentioned on prior calls as well, the 100 million run rate. Just, are you sustaining some of that momentum, or, what's the latest on the oral side?
Yeah, thanks for the question, Craig. We see the oral business continue to remain incredibly strong. And so the guidance of expecting at least $725 million of revenue contribution from our weight business effectively excludes any contribution from the commercially available dosages of semaglutide. We set the guidance typically based upon what we have line of sight to today. There's a few things that we do know hold true, and we've seen the oral business benefit as a result of it. The first is we know that our subscribers value the benefits the platform brings beyond the medication. Consumers are very motivated to lose weight and have a holistic platform to do so. We also know that consumers are looking for help and treatment from platforms that they do trust. So those are the elements behind one of the reasons why the oral weight loss was able to scale so quickly. We see continued momentum even when we had personalized or compounded commercially available dosages of semaglutide on the platform. Oral offering continue to remain quite popular as a result of broader eligibility requirements and as a result of many consumers just being candidly more comfortable with the modality. And so, as we look to what 2025 looks like, we do expect a continued meaningful contribution from our oral business. We're excited for liraglutide to come later this year. We expect those to be foundational pieces of the overall ecosystem for our weight loss specialty that can be supplemented, as Andrew mentioned, by the subset of consumers for whom personalized dosages of compounded semaglutide are an effective solution for.
Got it. And then just as a follow-up on the Hers platform reaching 30% of the business, outside of GLP-1, can you maybe just give some color in terms of some of the key categories that are driving traction on the Hers side?
Yeah, I think one of the things that we're seeing Hers really benefit from, first and foremost, is just many of the learnings that we had around marketing effectiveness from Hims, as well as strategies around personalization. We also brought over to Hers. What we also do see is that many of the categories for Hers are visible in nature. So things, in dermatology that are inclusive of both skincare as well as hair loss prevention for women remain incredibly popular. And so that is one of our fastest scaling specialties. We also, as we talked around at various points last year, see a very successful mental health business that is also thriving underneath Hers as well. And then the full ecosystem of weight, we're seeing that gain traction across both Hers and Hims. And so really we're seeing a healthy composition across multiple specialties driving the acceleration of Hers. And a large part of that is it's benefiting from many of the learnings that we had on the Hims side of being able to bring those over and drive faster acceleration to the Hers brand.
Got it. Thank you.
Your next question comes from the line of Eric Percher of Nephron Research. Please go ahead.
Thank you. A question on the transition beyond commercial semaglutide. Maybe question one, what happens to the patients and subscribers currently on the commercial product? How do you think about supporting them, and what portion do you expect would be viable for personalization?
Yeah, that's a great question, Eric. I would suspect we will have to start notifying customers in the coming month or two that they will need to start looking for alternative options on the commercial dosing. Obviously we have the expansive platform, whether it's the oral medications that are already out there, or if there is some reason that this patient would qualify for some level of personalization that exists. But I would suspect, just being very direct, that a lot of those patients will try to go into the open market and try to secure a branded option in some form factor. So, that transition is inevitable. I think that transition is going to have to take place and has been built into the guidance that Yemi provided.
And as you look out toward the end of the year, when you have Lyra and are building on personalization, do you have a feel for what portion of the weight loss population may be spread across those? Yemi, I might also ask you, I think we have 725 million as the goal this year. We know 229 last year for GLP-1, 100 for weight loss. Can you help us on the equivalent, or at least 100 for weight loss? Can you help us on the equivalent to that number of 725?
Yeah, I think what we're, what we would expect as we look to, the end of this year, given the fact that, we, as Andrew mentioned, are one of the platforms that has the ability to provide data insights to consumers. We also are a trusted and affordable brand. We do expect to see the oral based offering be quite popular, given the fact that, many other platforms will no longer be offering commercially available dosages of semaglutide. We are likely to receive benefits from that across both of our specialties on the oral side as well as liraglutide. And so I think that the competitive advantages that have served as a foundation for how we've been able to scale specialties in the past, the trusted brand, the value that we bring to consumers beyond the medication, will be a critical component of maintaining our existing ecosystem of subscribers, but then also continuing to draw a broader set of subscribers to the platform.
I would add there, Eric, one thing we talked about last quarter, I think is, again, as Yemi mentioned, the platform's capability to deliver a more comprehensive offering, higher touch care, increased personalization, whatever the actual medications are, is delivering what we believe is really fantastic results. And so even when you think about the oral medications, which I think a lot of people forget, that's a category with that type of personalization that is delivering, I believe we shared 10% weight loss at, more than or less than half the cost of the semaglutide, right? Both the commercial and the personalization. And so I think there's a real group of customers out there. I think it's overwhelmingly the majority that is looking for handheld care, and we can help achieve weight loss in different ways and different mechanisms with different treatments. But I think that's why there's a strong degree of confidence in the delivery of that 700 plus this year without the branded medications or the commercial doses. Just because I think what we see under the hood is patients really need help. They want to be cared for. They want that high touch, and that's really what the platform is able to deliver for them.
Thank you.
Your next question comes from the line of Daniel Grosslight of Citi. Please go ahead.
Hi, thanks for taking the question. I just had a numbers question here on the GLP-1 contribution this quarter. So it seems like for the full year, you guys were at, Yemi, did you say 225 million or so of GLP-1 contribution. In my model, and frankly, I could be off in my model, but I had you doing around 75 million in 2Q and 3Q. So that would put the fourth quarter GLP revenue, somewhere in that $150 million range, which would be a pretty nice step up quarter over quarter. But then it does also imply very limited or even declining sequential growth in non-GLP revenue from 3Q to 4Q. So just wanted to put a finer point on GLP-1 contribution in the fourth quarter specifically. And then maybe if you can comment on the quarter over quarter trends in the non-GLP-1 revenue. Thank you.
Yeah, thanks so much for the question, Dan. So I think across the year, both on the full year basis as well as within quarters, the vast majority of the revenue is still coming from the non-GLP-1 related offering. We still see, that the overall tenured specialties remain quite durable. Much of the increase in personalized subscribers that you're seeing, that number drive north of 55%, is driven in part by the continued shifting of subscribers to those categories. So overall, I think it's we're not necessarily speaking on a quarter to quarter basis of the performance at a specialty level, but we do see the overall core specialties outside of GLP-1 remain quite durable as you start to bring on some of the capabilities that Andrew mentioned in his prepared remarks, such as lab testing, and bring greater precision around personalization. We do see the ability for that to strengthen even further as we've seen acceleration in some of our tenured specialties in the past.
Okay. And then on, as we think about that 725 million of weight loss guidance for this fiscal year, I'm wondering if there's, is there any way to partner with some of the branded companies out there? One of your competitors does have a partnership with Lilly on tirzepatide vials. I'm curious if you would pursue something on the branded side of GLP-1s outside of liraglutide, or are you going to kind of stick with your knitting on what you got currently?
Thanks, Daniel. Yeah, great question. We've spoken to both of the leadership teams at Novo and Lilly, and looked at the deal that Ro did with Lilly and Lilly Direct. It's not off the table, right? I think the branded medications, without question, and we see this on our platform today with branded Viagra and other branded products. There is a subset of people that always want to get them. I think right now what is challenging is twofold. One, the actual reliability of sourcing those medication, and not to be kind of snickering here, but we still really can't actually source the branded medications from our pharmacies for our own platform. And so there is a limited supply in a way that prevents us from having any durable offering on the existing Hims & Hers platform at the scale that we offer it. Obviously for other players who have smaller scale, that's a different story. But that is still a challenge. And then I think the other thing that is a challenge is just the reimbursement rates are continuing to go down. And so frankly, the reliability that we can say to a patient that, hey, you're going to have this price and here's a guaranteed kind of locked in experience is kind of crumbling a little bit. And so I think we still need to see how that pans out. From a customer relationship standpoint, we want to have consistency. We want to have price transparency, like we've always talked about. We want to have seamlessness, and the current ecosystem across supply chain, reimbursement rate, cost, just really doesn't hit those marks in any way yet. Hopefully those do change, right? Because again, as a platform that likes to be Switzerland, we benefit from having more offerings on the platform. And our patients also benefit. So I think we're keeping our eyes open and seeing how the dynamics change, and always have a really open conversation with any of those companies that can be helpful in getting more breadth to the platform for these patients.
Makes sense. Thank you.
Your next question comes from the line of Ryan McDonald of Needham. Please go ahead.
Hi, thanks for taking my questions. Congrats on a great quarter. As we look at the GLP-1 business, you talked about personalized and commercial. Can you give us a sense of what the rough mix is across that? And then, as we get past Q1 here, is there any risk, whether it be from a legal or regulatory perspective, on continuing to offer the personalized version in your view? Thanks.
I think maybe I can take the first part, and then we'll hand the second part over to Andrew to address. I think we initially launched the platform with just commercially available dosages. What we see in general on our platform is, as Andrew mentioned, many of the folks that are coming to our platform have come and have had struggles with GLP-1s in the past. That was a genesis behind one of the reasons behind why we very quickly looked to roll out the personalized dosages as well. And so we see between that as well as the other benefits that we offer on the platform, the high touch provider engagement, is that given the fact that many folks have already experienced side effect concerns with the commercially available dosages, a majority of individuals on the platform today are utilizing personalized dosages versus the commercially available dosages. Andrew, you want to take the second part?
Yeah, sure. Yeah, I think the regulatory framework for the allowance of personalization and actually what that means, right? To Maria's question, the documentation, the clinical necessity of it, what the actual experience of it looks like, what personalization means from an actual dosing standpoint and a difference from commercially available drugs. All of this is very clear and regulated. And so, we play by the rules and the rules are quite clear. And so I don't expect there to be meaningful conflict when it comes to the personalization standpoint. I think historically, the broad industry, inclusive of the pharmaceutical companies, have recognized and respected, I think, the need for this type of clinical personalization of medications. I think what they have always really had issue with, understandably, just given the bottom line implications, is the mass scale production through the 503Bs, right? Commercial mass scale production is something that they would prefer doesn't exist. It is, again, regulatorily allowed, but with that closing as a result of the shortage, I think you'll see a meaningfully smaller number of players in market. I think the necessity for kind of a high filter of who those customers are and what the experience looks like and how it's documented will be very important. And ultimately, I think will be respected by most of those industry leaders.
Thanks. I appreciate all the color there. And then as you think about the liraglutide launch, any more specifics you can give us on sort of what we should expect in terms of the timeline for when that will become available on Hims? And then, how are you thinking from a pricing strategy perspective for generic liraglutide relative to the ranges that you have of orals at $70 up to, compounded GLP-1 at, $165? How should we think about where that could come in the pricing range here? Thanks.
Yeah, it's a great question. From a timing standpoint, I would expect sometime, mid-year or early second half of the year to bring that to market. On the pricing side, our ambition is always to bring this to market in the most mass affordable way possible. Now, with liraglutide, it's a bit of a challenge because you have, more medication that's needed, given it's a daily injection versus a weekly injection. You've got more sterile needles that are required on a weekly basis, given this. So, everything from raw API to packaging is more expensive. So I would suspect that there's going to be some trickle-down effect that results in this having kind of a similar price point to the commercial dosing in the couple $100 range. But again, I think our ambition will always try to get to scale quickly, negotiate either through our own third-party partners or through the verticalization of our own infrastructure to be able to then bring that price down over the coming year and bring it to people in a way that ultimately delivers great outcomes. And I think with liraglutide, the base level dosing has okay results compared to the newer generation GLP-1, but there's a lot of people that have very strong results when you pair it with other treatments, whether it's compounds on the oral side or healthy lifestyle or calorie deficit or even personalized doses of the liraglutide. So I think we have a lot of excitement for that medication because we think it will be a nice thing to add to the arsenal and be very successful for a certain group of people.
Your last question comes from the line of Aaron Kessler of Seaport Research. Please go ahead.
Hey guys, maybe just on the kind of for the testing, you kind of mentioned menopause testing as well as low T or low testosterone. Any thoughts on timing potentially for that offering, and then just maybe how to think about kind of sub growth versus revenue per sub for the year as well. Thank you.
Yeah, thanks, Aaron. We're really excited about the whole body testing. I think you'll hopefully see us start to get that in the market in the first half of the year, but if not early second as well, as we integrate Tribe in. And that's going to really unlock, not only more precise treatment, vitamin supplementation, but also I think multi-condition treatments, because you're able to really start to get early biomarkers for things like metabolic disorders, insulin resistance, cardio disorders on the lipid profile side. So I think there's going to be real expansion opportunities there that can expand, not only the number of customers that are coming to us every day, but also just the stickiness of the relationship. And then Yemi, I'll let you speak a little bit on the second half.
Yeah, so on the second half, we do expect continued expansion on revenue per sub. I think the pace of that, will vary depending on a few factors. One is just, as Andrew mentioned, as we start to roll out more multi-condition treatments, those typically carry, a bit of a premium to the existing treatments on the platform. So that will drive some expansion. And then as we see continued adoption on both the oral as well as liraglutide in the back half of this year, that's likely to yield some expansion in revenue per subscriber as well.
Great, thank you.
There are no further questions at this time. With that, ladies and gentlemen, that concludes your conference call. We thank you for participating and ask that you please disconnect your lines.
All right. So what do we think?
The call was okay. It was all about GLP-1s like we expected.
Yeah, it always is.
I think it's probably the guidance that the market is not believing. The Bank of America note, some of the analyst questions, how did they get to that $725 million revenue in 2025 for weight loss alone? And if they miss it, by a little bit, like not a huge deal, they'll probably make up for it in other products. They're still growing over 50% year over year. But I was like crunching some numbers, and based on what we know of certain products, the liraglutide, they were asked about that a lot of times. It sounded like it was more likely to be in half two, and my guess is because they mentioned that it could be a little bit earlier, that it's not going to be like December in half two.
Mid year to second half of the year.
Yeah. So it sounds like maybe a July or August launch is most likely. So I'm kind of curious, and they didn't give anything concrete from this. And probably, they can't, how fast that can ramp. And I'd really like to hear where they're at with their oral sales, because they gave us, unless I missed it, and I might have missed it, I'll look through the actual transcript. Back in Q3, they mentioned that they hit their oral weight loss solution was at $100 million annual run rate, their fastest ramped product ever to hit that.
Yep.
Did they mention where it's at now?
No.
Okay.
A lot of the questions were around that, though, like breaking out the 725 for next year in terms of GLP-1s versus oral weight loss, and then the personalized use cases as well. And that's why I think they were getting to the liraglutide questions, because they were trying to pick apart that guidance for that individual side of the business.
Yeah. And I was trying to do the same thing, like trying to figure out, okay, they got 1 quarter of semaglutide revenue, and they'll have a little bit of residual from the 503A, but it doesn't sound like it's going to be a lot. It's not meaningful compared to what they currently have. Right. Liraglutide is second half, probably not late, maybe late first half, but same difference. And so it's all about really ramping that oral. And what did you guys think about the what they perceive as tailwinds, that semaglutide and these other GLP-1 products will no longer be available through HIMSS and other platforms? The cost will go up a lot for people that don't have prescriptions, and so they expect there's some tailwinds for their oral solution. I found it credible, but what did you guys think on that?
I think it makes perfect sense. I mean, most people can't afford to waste like $1,000 a month just to lose weight. I mean, not that it's not important, but it's really like about purchasing power. I mean, it's not really for everyone to pay such a huge amount of money per month. And Hims offers its oral solution for $69 a month. It's like 6% of the price. So I mean, and you don't need to inject yourself, which for me it's a huge like advantage.
Oh yeah,
And
and that rate is available for a 10-month term. So the nice thing for Hims is if somebody signs up, like they expect that revenue for basically through the end of the year. So it's not that you can't cancel, but there I'd have to look into it and be reminded on what that penalty looks like. But yeah, I do think like the price tag is very meaningful. The early read, and it's not a published scientific document, but based on surveys, it's not as good as far as weight loss as the GLP-1s, but it's still significant. It's not a small amount that people are losing at a much cheaper price, and nobody likes needles. Like that's a problem with liraglutide is you're sticking yourself more often with needles. And yes, it's a cheaper price. Some people will try that. Maybe it's a little bit more effective too than the oral solution. But yeah, I think it's a lot of that 725 million is all about the oral solution really ramping. So would have loved to hear where they're at now for that run rate, but we didn't.
I think the highlight of this call is really that Andrew finally understood that it's not prudent to start a war with Novo Nordisk or Eli Lilly or whatever. And that was the main fear that the market had, that it was the litigation risk essentially. And he said, I mean, we play by the rules and the rules are quite clear. And he said he expected that most SEMA customers would like look for a branded version after Hims stops to being able to sell their compounded version. So overall, I think it was pretty bullish. And the fact that the guidance does not include any commercially available dosages of semaglutide after the first quarter is very good, because they could include a bit of the second quarter, because they can sell it until May 22nd. So it's almost the full quarter. So we might see maybe an increase of the guidance throughout the year. But I guess that will also depends on how the core business performs. And now they'll probably shift marketing dollar spend from GLP-1s to other categories, which is very good for the core business. And I got from the call that Andrew said in the beginning that Hims has north of 200,000 weight loss subscribers. So it means we have 2 million non-weight loss subscribers, which in my opinion was also a very, very good highlight here. And he said weight loss in general, right? It wasn't GLP-1s or oral or whatever. It was in general. So it really tells you like less than 10% of subscribers are in weight loss. I understand that the value per customer here is way higher than in other verticals, but still it really tells you that the company is not just about weight loss. They're kind of doubling down on weight loss, and they should, because it's probably the largest market where they operate. But this company is far away from being a weight loss play, like a pure play in weight loss.
Yeah, that is a fun, and it's important this quarter, especially with the recent news on the shortage list. But you would think from analyst questions last quarter and this quarter that that's all that this company does is they compound GLP-1s and that's it.
Right.
And we know like that's never been from any of us. And actually, I don't know any Hims bull that thought otherwise, that the long-term revenue would be there and sticky. Now, I did think, based on some of Andrew's comments over the weekend, that they were going to go after through a legal battle, basically try to shift as much as they could to 503As. It doesn't sound like that's the case. I actually prefer that as a shareholder, because
same.
I mean, like temporarily it would give them a boost in revenue, but it's like, man, I don't know that they can, with a few exceptions, that they can really prove that there's a clinical necessity And certainly, like, the intent of the regulation from the FDA matters. And the intent is not to use 503As to shift a ton of volume over. Now, they do have like guidance on what to expect as far as revenue. That HIMSS would be able to go around that, but it's still like this is better, and it's more durable long term. But in the short term, yeah, it's not surprising. You know, if some people were expecting that to stick around, and I thought that it probably would just because of his comments, but yeah, that's not the case. And longer term, this is much better.
I found it interesting, and maybe we can talk about it. The question around partnerships with somebody like Lilly or, you know, with one of those large providers, because as I'm comparing it with liraglutide, first of all, there's going to be a gap in terms of when that's going to be introduced later on in the year. And then the delivery mechanism, I think, you know, is interesting as well, right? Because like Manuel and I were talking about this daily injection being something that dissuades people because you don't want to, you know, stick a needle every single day. You'd rather do it once a week if you can. But then the interesting part that Andrew also mentioned was that they can't really have the price be even like ridiculously cheaper than semaglutide because it's going to be more expensive for the company to just even do like needles on a daily basis, and the expense lines there might be higher. And so it got me thinking around the partnerships aspect. Like if they can make a partnership with Eli Lilly or whomever to do a branded semaglutide, you know, GLP-1 product line, and they won't be earning as much money as they would have before, but it's a revenue line that they just wouldn't have had access to post May 22nd once that goes away. Like that to me, from a user perspective, seems like a more beneficial product offering than liraglutide, right? Because liraglutide, they can own the majority of that share, but I would imagine the take rate is going to be much, much smaller if the price is going to be similar to semaglutide for anybody else. So if I'm picking between two options, liraglutide for HIMSS, and I have a daily injection and the price is maybe, I don't know, 80% of what the semaglutide price would be somewhere else, I would just go with the semaglutide because I would pay the extra money and I would have one weekly injection. It's like, it's a trade-off that a lot of people will be making. And so I just think that like, if they have that option for partnerships on the table, then from a user perspective, that's going to be even like way more compelling for them to have a higher take rate.
Yeah, it looks like the price is about a third of the price without prescription versus the semaglutide. So, but you know, I expect it's a lower margin product.
Yeah, but you have to keep in mind that like everybody else has jacked up prices, whereas like you're comparing it with HIMSS semaglutide price right now.
No, I'm just looking online at GoodRx and now
like HIMSS will take off a lot of their margin to make it more affordable for people and scale way faster because they're the cheapest solution in the market. And so that's going to be like, it's not an apples to apples comparison. It's only apples to apples if you compare it to HIMSS semaglutide, right? Because the rest is pure margin that Lilly is raking in.
Yeah, what I'm saying is basically liraglutide is 1/3 to 1/4 the price of semaglutide if you're going elsewhere and purchasing it. So yeah, right now as compounders are compounding it, you're able to get it at a cheaper price. But when that price jumps up, if you don't have a prescription,
right,
a lot of people, like Manuel said, are going to be looking for an alternative, and those alternatives are liraglutide coming in second half, which
right.
I mean, like if you really love needles, I guess, but it's not as good of a product, and you stick yourself a lot. So I think, you know, they'll probably really go aggressively as far as marketing. Well, first helping people understand like, hey, this is what's happening. This is where you can go get semaglutide if you'd like. We also have liraglutide that's coming out later this year. And right now, try our oral solution. Here's a $10 off coupon, or I don't know.
Right.
But they have some avenues there. And I do think that they're going to have pretty great tailwinds on that product. And it's a higher margin product too for them. So I think that they'll be okay.
Right. Yeah.
And no one asked about the timeline for testosterone or menopause treatments.
They did. One of the questions was around the timeline and the price. And they only answered the price. It was like the second last question or something. He talked about the Tribe Labs integration being in 2025 and how, you know, they want to get more personalized for what they can offer, but they kind of dodged the question of the timing of when those two product lines are going to be launching. I
So
also thought it
what's
was interesting. Yeah, go ahead.
I was going to say what's happening. It's basically they're releasing it just after GLP-1s, and it's kind of what we talked about like a month ago or 2 months ago, that they could. I mean, probably they're not delaying it, but they're taking advantage of those new verticals to kind of compensate for the decrease that comes from not selling GLP-1s. So I think with those two new categories and other to come, I think in 2026 we won't see uh, uh, the growth rate that much affected as everyone was thinking. Like some people were even pointing for a negative growth in 2026, and I don't really think that will be possible, especially
Right.
if they're not contemplating selling, thankfully, GLP-1s after the shortage, just like a small portion of the customers who are classified for the exemption.
Right.
So I think this was very bullish for in the medium term. Let's say I don't care what happens tomorrow. I'm not buying nor selling, but I really think that the change of tone from Andrew was really good for at least for the market overall and for institutions, because a lot of people were like, "Oh yeah, keep selling GLP-1s after the shortage. It's yeah, you have the exemption. It's okay." But I mean, institutions really were shorting based on that, like because of the fear of litigation risk. Not only because Hims was going to lose a good part of its weight loss revenue, but also I think the main point for shorters, sorry, was that Andrew was constantly doubling down on we'll keep selling GLP-1s after the shortage ends. And I mean, yeah, they can keep selling for a few customers, but the tone from the previous earnings calls sounded like he wanted to just continue to do business as usual. And
Yeah.
fortunately, he said it's not the case, and he literally said we play by the rules, and the rules are quite clear. So I think it was really good from him to change the tone.
I think
Well,
just like
and not just change the tone, but be very clear. Like beforehand, like the reason why institutions and even myself were thinking that they're going after the strategy is because he almost said it. Like he didn't say that they were going to do it, but it was done in such a way that it's like it was easy to infer. So I prefer this.
yeah. Yeah, it's so like, and this is neither here nor there, and I don't want to go on a tangent, but like, it's kind of, and I didn't really think about this before I was invested in Hims. I only started thinking about after, but it's kind of ridiculous how in this day and age, for something as large as weight loss, which is like affecting over 70% of Americans and a large percentage worldwide, that big pharma can just, literally have a monopoly on selling those drugs. Like it's just crazy to me. It's like if these car companies put a patent on selling a car, like you can sell different models, you can sell different colors, you can sell different form factors, but the actual technology itself, you should have, and this is like ideal state, you should have a government and a regulatory body that welcomes more manufacturers to address and tackle that problem as soon as possible. But instead, big pharma companies are like, nope, this is our patent. Sorry, you can't. And like they literally corner that entire part of the market. It's kind of ridiculous to me how that's even allowed.
I mean, I understand, but it's kind of how innovation works. Let's see.
Yes.
What incentive would they have if they just spend billions and billions of dollars in developing a new drug, and then everyone can just go around the patent and just provide it way cheaper and like even more in more effective ways because of the personalization? I mean, I understand your point because it would be very beneficial for the customers. But I mean, if that was the case, we probably had much less drugs for a lot of diseases and a lot of
I understand how we got here, and I'm not saying like I understand this is the world that we're living in, and I can't really change that. It's just kind of crazy to me when you apply it to something so large as the problem that this space specifically. It's just it's kind of crazy. Anyways, like I said, neither here nor there. But yeah, a lot of focus on the 725 million in weight loss. And yeah, I think a lot of the analyst notes and a lot of the commentary going forward is going to be around trying to break that out, trying to determine what the growth rate is for that oral solution, because that's really the only thing that's going to hold them over until liraglutide comes. If you're talking about it on scale stuff, right? Because with Andrew's commentary around, hey, like they're not just going to blatantly defy, the FDA's ruling, then really the oral solutions is the only thing that's going to hold them until liraglutide comes out.
Yeah, and I don't know. It would have been nice if they kind of at least told us where we're at. But yeah, I'm looking at that number and I'm finding it a little aggressive. But like if they came out and they said like 600 million, the guide would still be really good. But I think that the market is just focused on that and just not believing it at all.
Yeah.
And what about the part where he said he expects to reach 10 million subscribers in 5 or 6 years? I mean, he didn't say literally 10 million, but the question was about tens of millions. So of course he's not expecting tens of millions. But he said the personal goal was like 5 to 6 years. I think it kind of aligns with what I was expecting. I made a post like in August. I made a post in August with a chart of the subscribers and like asking, will Hims ever reach 10 million subscribers? Because I mean, I was pointing out that we were still very early and so on and so on. And I said that I'm pointing out to 2030, between 2030 and 2032. And according to what he said, it should be around 2030, 2031. And we're not here factoring that he always under promises and over delivers. So I wouldn't be surprised if it's by 2029 or something like that. But it's still a compound annual growth rate of like over 30% from current subscribers, which is insane. I mean, it's just a personal goal. And of course, it doesn't mean that it's going to happen. But it's a good guidance to give.
Yeah, and it's I think it's doable, but it needs growth from more than just like if you took the entire market in 2024 and all their competitors are these ones that they listed, like they wouldn't be at that. And so a lot of this comes at the expense of the old way of doing things and disrupting that those distribution channels too, even while holding off competitors. But it's all about that and this right here, that they'll continue to innovate. They'll continue to give more levels of personalization. They'll come out with more products as well. And I mean, like they have the numbers right here. The total addressable market in the US population alone is quite substantial with just each of these sections. And so I think that they can definitely hit that.
Yeah.
I found that interesting also how they were mentioning through personalizations, they want to get to a point where they're doing thousands of variations, of that product instead of tens or hundreds, which is kind of crazy to think about.
And we're at 300 now.
Mm-hmm.
According to the shareholder letter, they have now over 300 personalized dosages, I would call it maybe. What did they say?
Different options, different combinations.
Yeah, personalized offerings. So, and I think last quarter or 2 quarters ago, they were at 100 or like over 100. So not really precisely, which means they're kind of expanding them pretty quickly.
Yeah.
I think overall, this was probably not a quarter as incredible as everyone was expecting, but the earnings call was really more comfortable, I would say, than the previous ones. Because in the previous ones, they reported and the quarter was insane. We were here like crazy talking about it, huge free cash flow, huge everything, great guidance. Everything was incredibly good. And then on the earnings call, the stock started to crash because he was essentially saying that Hims was going to buy a war with Novo Nordisk and they wanted to continue selling GLP-1s, etc. And now I think it was kind of the inverse, but in a good way, because the quarter was still pretty good. The guidance was very good. The full year guidance, especially if they say that they are not including any semaglutide or commercially available dosages of semaglutide post the first quarter, is way above what I was expecting, and I thought this could like make the stock like spike a bit in the after hours, which didn't happen, but I don't care. But essentially, I prefer this outcome rather than the outcome of the last quarter, which was huge quarter, not so good earnings call. I mean, the earnings call was great still, but it brought a bit of litigation risk to the table, and now it's the inverse. We're taking off a bit of the litigation risk from the table, which is, in my opinion, what's sustaining the low, not so low right now multiples of HIMSS, but what was putting more pressure on the stock.
Yeah, I thought that we would see a lawsuit, but I didn't expect to see the one towards the FDA. I thought it would be after the earnings call, that maybe later this week, possibly tomorrow or the next day, depending on the comments from the CEO, that Novo Nordisk would be coming out firing. And they probably had things ready and drawn up. And in light of the earnings call, I expect that they're saying, okay, he's going to do what we think that he should do based on FDA guidance. If something changes, we'll see. But yeah, I think that shooting war is off the table. So
yeah. And look, I do think that, yes, the numbers were probably not as strong as Manuel and I both had guided, but it's also like a double beat with great guidance. I think the guidance is like one of the strongest points for the entire report, at least for me. It was kind of a mixed call, mixed sort of report. I would still give them an A- type of grade. Does it justify a 17% fall? Absolutely not. The fact of the matter is that a lot of expectations were baked into this earnings because it had run up so drastically. As a result of that, the stock becomes priced to perfection. And it's in fact healthy if you get some type of correction afterwards, because then you just get, I mean, we went through like a sugar rush essentially over the last 2 years, and now we're sort of crashing and coming back down to normal. Overall, I think the business is definitely set up to do what they're guiding for in 2025. And the thing that, I put up a poll here in the chat, and in this poll, 1,000 people have voted on it, and 13% of those people, they responded with the most negative response, which is, I'm out of this stock altogether. Like, I'm just selling out on this report. And I didn't really find anything that is worthy of me selling out. Like, there's things that are sort of like beige flags. Like, I'm like, not.
It doesn't mean they're selling. Some of those guys maybe like didn't really like hold it, like, or
yeah, it's fair. But my point is that if you literally couldn't see what the stock price was doing, and if the stock market on a daily basis was not available, like you could invest in these companies, but you couldn't see the tickers going up and down on any single day, and you were listening to this call as an investor, you'd think this was a great call. The company's on track. I might even buy some more. Fantastic. But because you see the stock chart moving up and down, like, it affects your emotions. And the moment you see minus 17%, you must be thinking, am I stupid for thinking this was good? Like, something must be drastically wrong here. And all I'm trying to say is, looking at the stock price in the short term affects your perception of how good or bad the earnings call was. If you remove it and you just look at the numbers and the call, to me, at least, it was a fairly solid quarter.
Yeah, I agree. Well, part of it too is like it ran up so hard. Like, if you had told us on January 1st, if we got together and we said, what's your prediction for price after the earnings call? And we said 40 something bucks. Like, man, that's a great quarter and great results, and everybody's going to be so happy. And it's true. But it doesn't feel good when you were recently at the 70s and it falls as much. Nate, by the way, posted a comment. He said, and I've heard this, I haven't looked myself. Manuel, you've been in this longest. He says that they haven't missed an earnings guide since they went public. Is that accurate?
Revenue, yes. Earnings per share, they slightly missed like 2 times or something like that.
Okay. Yeah.
but it's still incredible.
Oh yeah, yeah. Like that's the thing is with the 725 million, that's aggressive. This isn't like if you guys are SoFi shareholders, and probably a lot of you guys are. They guide very, very conservatively. PayPal guides very, very conservatively. Hims guides aggressively. They tend to hit it, but yeah.
Now they guide aggressively, but they historically they
That's true.
had very conservative guidances.
Since I've been a shareholder, they've been aggressive. So
And you can look at it as aggressive, but for instance, if you look at it like 1 year ago, literally, I think in 3 days it will be 1 year. They reported the fourth quarter of 2023, and it was the first quarter with the oral weight loss solution. So the guidance for the first quarter of 2024 and for the full year of 2024 was like very aggressive when you looked at it like at first glance, but then they ended up beating it by a lot. And even without GLP-1s, they would have beaten like significantly. So at the time, we thought it was way aggressive, and now it wasn't that much. So I'm not saying this will be the case in 2025, but it, based on their track record, it wouldn't really surprise me. And yeah, I mean, 1 year ago, I was literally arriving from a trip to Milan, and I was like watching the stock price going from $10 to $15, and everyone was crazy happy about it. And finally, everyone was starting to talk about Hims, because I mean, at the time, no one really cared about it, and it was everything about the oral solution, no GLP-1s. Now it's the end of the world because we're at $42. It's
exactly.
insane.
Yeah.
And less than 1 year later, I think it was on the 27th or something like that. It's really, the market really teaches us good lessons.
Yeah, having a long-term perspective is very helpful.
Yes.
Yes.
Okay, let me just do for fun, and we just talked about this, don't look at the stock price, but for fun, what do you guys think this what do you think this trades at tomorrow? Or maybe let's do end of this week. At the end of the day, 4 p.m. on Friday, what do you think the price is going to be? Just for fun.
200.
36.
36, says Roy. I think it's going to be 47.
I think maybe. Let's say, so it's at what right now? 42.
People are like prices writing me. 37, 35.
55.
All right, so Manuel thinks 55 by 4 p.m. on Friday.
Someone has to be bullish here.
I think 47, and then Roy thinks 36. Roy Bear is back with yet another stock he's covering.
Well, here's the reason why.
Yes.
Is I think a lot of it's macro right now. The market is in a risk adverse mode, and a lot of the names that have run up sold off really hard today. So some of this sell off, Hims kind of held flat, but everything else sold off like really hard that you would think that Hims normally would. So I think half of the dip is that. There's the 3-day rule, which is usually a lot of people, myself included, and also institutions, tend to wait and let this thing drop a little bit further. Analysts will come out with their guidance, and I don't know that they got their questions fully answered or resolved in their mind regarding the ramping of the other weight loss products and the timeline of some certain things. So it wouldn't shock me to see a little bit of caution there, more risk off macro, and just people not ready to buy the dip until later into the week. So I think that combines. Plus, short sellers are greedy, and they this is a big part of their thesis. Hey, GLP-1 revenue driving up, the lawsuit is off the table, but I don't know how many were like purely going after this simply because of a chance of a lawsuit. I think that they just saw that as a possible upside for them. But anytime that there's weakness, it's like, if there's blood in the water and there's sharks, they just swarm to that. So it wouldn't shock me if short interest actually goes higher than it was previously, just based on this report. Even though just like not believing the guidance at all, and just being greedy with the price action, just thinking like, hey, this was in the teens not long ago, we can probably get it back down then. I don't think they can. They'll get greedy, and again, they'll get burned, but it may be a couple of months.
Yeah, I can totally see that. I was just throwing out a better number than yours.
I see how it is.
Yes. Yeah.
I want to be the favorite guy here.
Yeah.
And I'm always the bear, I guess.
Manuel's guiding policy: bigger is always better. Bigger number, you get more love.
Exactly,
man. How fitting for Hims, man, honestly. But look, I think the response tomorrow is not going to be as bad as it is right now, especially if we have a green day tomorrow. I think it's going to get cushioned a little bit, but also like as people digest really these results, I think that big sort of dark cloud of this earnings report, and all of this being priced in ahead of time, that's gonna go away because now we've had the catalyst. Implied volatility is going to fall, and I do think we will settle somewhere in the 40s, maybe high 30s, but and then start to stair step upwards depending on how the rest of the market does, right? So we'll see, and we'll sort of go from there.
Either way, I'm not worried. The results were fine. So
yes.
Do you guys have options open or something like that?
No. I don't. Like, the only thing I do on this for options is sell options. So the stock's volatile enough.
I have leaps, which are probably going to get killed, but that's why they're leaps. There's still 2 years left on them, so I'm not really worried about that. I'm probably going to add to them, honestly, this week or so. But yeah, I'm selling a bunch of options. I'm going to do cash secured puts probably again tomorrow or on Tuesday. Tuesday or Wednesday, I mean. But yeah. Somebody said, by the way, shout out to Roy, love you, man. Don't tell Tevis. You're saying it literally on my channel.
I have a channel, in case you don't know. Come on over.
Roy does have a channel. Shall we wrap it there, guys? What do we think?
Yeah, I mean, 2 hours and 40.
2 hours and 40 minutes.
Sleep. It's almost midnight here.
Thank you to the over 500 people who stuck with us. I think we're going to be better off, definitely better off on the long term. But we'll keep you updated how this goes in terms of the compounder lawsuit against the FDA. And then I'll also be dropping a video around my Hims earnings breakdown. I'm sure Roy's going to do the same, and Manuel through X as well. So keep an eye out for those. Thanks everybody for watching, and we will see you in the next one.